Good morning. How you doing? Good, good, good.
Kristen? Good morning. We have quorum present. I call this meeting to order. Are there any declarations of interest? Please indicate the item number and the nature of the interest. Seeing none, I will now take a motion to confirm the minutes from March 24th, 2017. Councillor Carmichael-Greb, all those in favor? Carried. We can now go through the items. AU 9.1, there's a speaker, and that is the City of Toronto 2016 Audited Consolidated Financial Statements. I also believe there's a presentation on that. AU 9.2 Sinking Funds 2016 Audited Financial Statements. We have a speaker registered for that. AU 9.3 Trust Funds 2016 Audited Consolidated Financial Statements. Is there anyone? Councillor Ford, you have a motion to adopt the staff recommendations. All those in favor? That's carried. AU 9.4 Financial Statements for the year ended December 31st, 2016, agencies and corporations. Is there someone that would like to place a motion? Councillor Carmichael-Greb.
You're going to go through each of the...
Thank you. The clerk has informed me that I have to go through each of the items one by one. So if you just bear with me, I will need motions on each of these.
If anybody, you can just take holds, and at the end of the...
So the clerk's advised we'll take holds, if any, on them. And then otherwise, we will take a motion for each of the items, Madam Clerk. And we...
Take one item if none are held.
Okay. The clerk advises that we can take a single motion to adopt them if none are held. So, item 4A, Exhibition Place 2016 Financial Statements. Item 4B, Heritage Toronto 2016 Financial Statements. Item 4C, Toronto Parking Authority 2016 Financial Statements. Item 4D, Toronto Public Library Board 2016 Financial Statements. Item 4E, Toronto Transit Commission 2016 Financial Statements. Item 4F, Toronto Zoo 2016 Financial Statements. Item 4G, Yonge Dundas Square 2016 Financial Statements. Item 4H, Toronto Pan Am Sports Centre Inc. 2016 Financial Statements. Item 4I, the Hummingbird Centre for the Performing Arts, operating as the Sony Centre for the Performing Arts, 2016 Financial Statements. Item 4J, the North York Performing Arts Centre Corporation, operating as Toronto Centre for the Arts, 2016 Financial Statements. And item 4K, St. Lawrence Centre for the Arts, 2016 Financial Statements. May I have a motion to adopt the staff recommendation?
I actually would like to hold the Toronto Parking Authority financial statements.
Okay. May I have a motion to adopt the balance of the financial statements? Councillor Matlow, all those in favor? That is carried. AU 9.5, status of the financial statement audits of the city agencies and corporations for the year ended December 31st, 2016. We have a speaker that will be held. AU 9.6, Arenas 2016 audited financial statements. May I have a motion to adopt the that we recommend that City Council adopt the staff recommendation. Councillor Ford? All those in favor? That's carried. AU 9.7 Community Centers 2016 Audited Financial Statements. May I have a motion that we recommend that the City Council adopt the staff recommendation? Councillor Carmichael-Greb, all those in favor? Carried. AU 9.8 Business Areas of Improvement BIAs 2016 Audited Financial Statements, Report Number 1. Okay. 9.8.
I'm sorry.
Yep. May I have a motion to adopt, recommend that City Council adopt the staff recommendations? Councillor Carmichael-Greb, all those in favor? Carried. AU 9.9 Real Estate Services Division, restore focus on Union Station leasing. There is a presentation on that, so it's held. AU 9.10 Supplementary Report to the Auditor General's Phase 1 report. The city needs to ensure adequate direct detection and review of potentially excessive and unusual drug claims. Is there any members wishing to hold that item?
No, happy to move it.
Okay. Councillor Matlow moves this item that we recommend that City Council adopt the staff recommendations. All those in favor? Carried. AU 9.11. Review of the Toronto Transit Commission procurement policies and practices, improving materials management and purchasing policies can potentially result in significant savings. That's being held for presentation. AU 9.12, Auditor General's observations of a land acquisition at Finch Avenue West and Arrow Road by the Toronto Parking Authority, Part 2.
Like to hold it?
That's being held. I also have a statement on that. Members, with respect to item AU 9.12 on the Toronto Parking Authority land transaction, since the item was published, I have had discussions with the city solicitor, the city clerk, and the Auditor General about the confidential attachment. I am persuaded that the confidential attachment should actually be made public as the stated open meeting exceptions do not apply. I am therefore ruling that the confidential attachment is in fact public, and I am directing the committee clerk to release it, which she will do online as soon as she can. Members, this means a closed session is not required to discuss the contents of the report, subject to the committee straying into territory that may be accepted by law, such as seeking additional advice that is subject to solicitor-client privilege. Item number AU 9.13, Auditor General's 2017 Status Report on Outstanding Audit Recommendations for City Agencies and Corporations. We have a speaker, and that item is then held. AU 9.14, Auditor General's 2017 Status Report on Outstanding Audit Recommendations, City Divisions in Cluster B. May I have a motion to recommend that City Council adopt the staff recommendation? Councillor Ford, all those in favor? That's carried. AU 9.15, Audit Work Plan 2017 Update and 2018 New Audits. We have a speaker registered for that item. It's held. AU 9.16, Auditor General's Office Report on the results of applying specified auditing procedures to the financial information other than financial statements for the year ended December 31st, 2016. May I have a motion that we recommend that City Council adopt the recommendation? Councillor Matlow, all those in favor? It's carried. We'll go back to the top of the order paper. AU 9.1, the City of Toronto, 2016 Audit Consolidated Financial Statements. I believe Mike St. Amant.
Sorry, you should probably hear from the speaker first. It's up to you.
Oh.
Hear from the speaker.
My apologies. The clerk's informed me that we will take a message from the speaker first, and then we'll have the presentation second. The registered speaker is Derek Moran. Is Derek present? Good morning. You have 5 minutes.
I just want to say, by me speaking at this meeting, this shall not be deemed to be in any way my consent, express or implied, and doing so is fraud. God bless Her Majesty the Queen, and long live Her Majesty the Queen. I noticed there was a link here for an Appendix C as a glossary section for this item. I've mentioned before here that in legal jurisdictions such as the City of Toronto operates in, as it is a creature of statute, a creature of legislation, then only the legal definitions matter. So I took an interest in reading this link. There's a definition for MPAC, it turns out. The Municipal Property Assessment Corporation is a nonprofit organization which serves Ontario property taxpayers together with provincial and municipal stakeholders by providing property assessments and enumeration services. Now, here's the part that I will just never understand. Shouldn't the name of this organization really read the Common Law Property Assessment Corporation? Why municipal? If Ontario is actually a common law jurisdiction where the rules of equity apply also, then how does Roman municipal civil law, a foreign jurisdiction of law, mind you, even factor into any of this? You know, at Public Works the other week, I showed that email from Mike Cole's office, who got in touch with the Attorney General's office, who got back in touch with them, that Ontario is actually a common law jurisdiction, and we rely on the common law, not a code. So, nevertheless, we the people of this common law jurisdiction get held by this hostage by this phony code. In the meantime, and I've mentioned this before at the Toronto Police Services Board last year, but at that time the Auditor General wasn't there, and I was kind of hoping that the city manager would be here today. And I just want to let the councillor from my area, Councillor Greb here, know, and everyone else, that there's something about municipal jurisdiction and municipal law that most people don't realize. So this is in 1856. This is from the U.S. Supreme Court in Dred Scott versus Sanford, a case that's been cited by the Court of Queen's Bench of Alberta, 2004, in Reddle versus Reddle, said that slavery is sanctioned by the laws of this state, and the right to hold slaves under our municipal regulations is unquestionable. The state of slavery is deemed to be a mere municipal regulation. The Constitution, in express terms, recognizes the status of slavery as founded on the municipal law. Slavery, being contrary to natural right, is created only by municipal law. Slavery is sanctioned by the laws of this state, and the right to hold them under our municipal regulations is unquestionable. Slavery must depend on the municipal law, which creates and upholds it. And not only must the status of slavery be created and measured by municipal law, municipal legislation becomes necessary when slavery is introduced. But we view this as a right existing by positive law of a municipal character without foundation in the law of nature or the unwritten and common law. And there's also something called the Lieber Code from, everyone reads this stuff back in 1863. Small print there, Article 42, slavery, blah, 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 exists according to municipal or local law only. So, by the way, MPAC is a nonprofit organization which has given me very good reasons to believe they are not competent to do their jobs properly, as the nicer house across the street had their property taxes raised 7.5%, and my father's 19%. But he called Councillor Greb's office 2 weeks ago, and she promised me that she would answer every question I had of her. She mentioned at her first budget town hall meeting, so I trust that she'll get back in touch with them. And I know I came here and I talked about how there's actually no law that says anyone has to pay property taxes. This is from the former Director General of the CRA, Kathy Howera. She did some sort of committee hearing, open parliament thing. And on the second page, I know Councillor Matlow would be interested in this. She makes a comment that's pretty small print. I'll just read it. Canada's tax system is based on voluntary compliance. That's why you guys send that remittance attached at the bottom of any bill, you know, because there's a whole kerfuffle about that last time I was here. That remittance, a credit item, Joseph Levitas told me it's a credit item. That's what's to be used in regards to funds related to the security of the person we have, because the trust pays the taxes. As a CRA employee, once told me, who was an instructor of mine while I was taking an accounting course. So,
Thank you. Are there any questions for the speaker? Thank you. Are there any other speakers to this item? Seeing none, I will request the staff this time for real to make their presentation. I apologize for the going out of order there.
Good morning, Chair and members of Audit Committee. Thank you for allowing Director of Accounting Services Sandra Calafretti and me to present the City's 2016 Consolidated Financial Statements. The staff report that accompanies the statements provides details and highlights on the statements and helps give some meaning to the numbers. In the interest of time, we will not be speaking in detail to all of the slides, but we will respond to any questions you may have on the statements or the presentation. You're way ahead of me. This is an outline of today's presentation. We will start with a general overview. We will present the 2016 financial statements at a summary level. We will talk about differences in the way municipalities budget and the way we present our consolidated annual financial statements. We will discuss some key financial highlights. We will provide updates on future changes in accounting standards that will be coming. We will provide some concluding comments, and then we will respond to any questions. It's always appropriate to remind the committee of the roles and responsibilities of management and the auditors. Management is responsible for preparing the financial statements in accordance with generally accepted accounting principles, GAAP, established by the Public Sector Accounting Board, maintaining sound financial and internal control systems designed to ensure the proper recording, control, and oversight of the city's financial activities. The city's external auditors, PricewaterhouseCoopers, audit the statements and review and evaluate the city's control and financial systems and in accordance with generally accepted auditing standards. They provide an independent opinion as to whether the financial statements present a fair and accurate picture of the city's financial activities in all material respects. Joining us today, to my left from PwC, are Michael Houghton and Kathy Russell, the engagement partners, and Uroj and Omar, the managers in charge of the audit. There are 123 entities captured or consolidated into the city's financial statements, up by one as compared to last year, as we had one new BIA this year, the City Place and Fort York BIA. So our financial statements reflect the combined assets, liabilities, revenues, and expenses of the operating, capital, reserves, and reserve funds of the city and all of its agencies and corporations. The statements also capture the city's investment in government business enterprises, or GBEs, but these are not captured on a line-by-line basis. They're shown as investments on the city's financial statements. GBEs are self-supporting business enterprises controlled by the city. Each of these organizations and GBEs prepare their own financial statements, which are presented separately to committee and council. Agencies and corporations, arenas and community centers, and the BIAs are listed on page 9 and 10 of the consolidated financial statements, which are in Appendix A. I will now walk you through the city's 2016 consolidated financial statements. The first statement we are going to review is the Statement of Financial Position, which is the municipal equivalent of the private sector's balance sheet. The statement summarizes the financial position of the city at December 31st, which is the city's fiscal year end. The Statement of Financial Position presents a consolidated summary of financial assets, liabilities, net debt, which is the difference between financial assets and liabilities, non-financial assets, which are largely tangible capital assets, and resulting in an accumulated surplus, which represents the amount by which all assets, financial and non-financial, exceed all liabilities. The city had financial assets totaling $9.3 billion at the end of 2016, liabilities totaling $15.8 billion, both short and longer-term liabilities, with net debt of $6.5 billion. The city's non-financial assets, largely TCAs, increased by $1.7 billion during the year to $29 billion. The resulting accumulated accounting surplus at year-end is $22.5 billion, $1.2 billion higher than 2015. The Statement of Operations Accumulated Surplus is the municipal equivalent to the private sector's Statement of Income and Retained Earnings. The statement reports on a consolidated basis, including all of the ABCs, operating capital, and reserve funds, the revenues earned in the year, the expenses incurred for the year, including non-cash items such as amortization of tangible capital assets, and the accumulated surplus, annual surplus, which is the difference between the two. You'll see that in 2016, the city earned revenue of $12.2 billion from various sources, incurred expenses of $11 billion, with an overall annual accounting surplus of $1.2 billion. This accounting surplus is different from the operating budget surplus reporting to Budget Committee, and we will explain the difference in an upcoming slide. Although the accumulated surplus is large, its main component is tangible capital assets of almost $29 billion. The other main components are the operating capital and reserve fund balances, which total $3.6 billion and are on note 17 of the consolidated financial statements. Please note that the negative capital fund of approximately $799 million and the amounts to be recovered in this slide, mortgages, debt, and unfunded liabilities totaling $9.7 billion, must be funded from future taxes or rates. Even though our accumulated surplus is high, it's important to recognize that tangible capital assets are non-financial assets and that these assets do not provide liquidity or cash and are not typically available for sale. We can't sell the vast majority of our capital assets, our roads, bridges, community centers, etc., to generate money that can be used for other purposes because we need them to be able to provide services into the future. And in many cases, our assets are not income producing, like the private sector. What is important to note is that the city's accumulated surplus of $22.5 billion is less than our total financial assets of $29 billion, which is resulting in our net debt position of $6.5 billion. The statement of change in net debt is unique to governments. Net debt is a very important number for all orders of government and is an indication of the reasons for borrowing. Toronto, unlike the province and the federal government, can only borrow for capital, not for operating. This statement helps us to understand the activities in the year that led to the change in net debt. By adjusting the annual surplus to account for the impact of non-financial assets, which is largely our tangible capital assets and other non-financial asset adjustments. Starting at the top of the statement, you will recognize $1.2 billion of the annual accounting surplus that we saw in the Statement of Operations and accumulated surplus. Included in that amount is $974 million for the amortization of tangible capital assets, which is not a cash expense. This indicates the city had approximately $2.2 billion available to invest, and we actually spent $2.6 billion acquiring tangible capital assets. So the overall net debt increased by $418 million, bringing our net debt at the end of the year to $6.5 billion. As the statement indicates, our increase in net debt is largely driven by our investment in tangible capital assets. The last statement is a statement of cash flow, page 8 of the city's financial statements in Appendix A. Once again, we start with the annual accounting surplus of 1.2. We add back non-cash expenses. We adjust for changes in non-cash assets and liabilities. Shows that the city's consolidated operating activities generated $2.5 billion in cash, but we spent $2.6 billion on tangible capital assets. We had net proceeds from debt financing of $271 million. So overall, our cash increased by $1.24 billion during the year. This completes the summary review of the financial statements. Before I turn it over to Sandra to talk about some of the financial highlights, I just want to explain the difference between the way municipalities budget and the way municipalities must prepare and present their annual financial statements. This should clarify why the annual accounting surplus reported in the city's financial statements differs from the operating budget surplus reported in the year-end operating variance report. To begin with, the city's financial statements are prepared on a consolidated basis, combining the financial results of all agencies and corporations in our investment in GBEs, the tax and rate-supported financials for tax, water, and solid waste, and it combines the activities of the operating, the capital, reserves, and reserve funds. On the budget side, we have separate budgets for the city and each of its agencies and corporations, and separate budgets for tax, water, and solid waste. And we therefore then separate it even more by operating and capital. So the annual operating surplus reported through the budget process only reflects the surplus for the city, and the surplus for tax, water, solid waste are reported separately. They are not combined in budget reporting. In addition to the consolidation issue, another key reason for the difference between the two surplus numbers is that financial statements are prepared on a full accrual basis, whereas budgets are prepared on a cash requirements basis. So the financial statement side, the annual surplus includes expenses which do not require cash outlays, such as amortization, and changes in liabilities for future employment benefits and landfill closure costs. While on the budget side, the annual surplus is based on cash requirements for operating expenditures and does not include non-cash expenses. Also, for financial statement purposes, capital assets are capitalized. They're recorded as assets and amortized over the expected useful life. While on the budget side, capital expenditures are recognized as the asset is acquired or built. No amortization is recognized. Assets are fully written off for budget purposes as they are acquired. So the two surplus numbers will always be different for valid reasons, but we do balance them in the report that comes to this committee and to council. It's important to remember the accounting surplus presented in the city's financial statements includes non-financial assets, basically our investment in capital assets. From a cash requirements perspective, the operating budget surplus is the key number to focus on and the number that we send our tax bills based on. The staff report includes a reconciliation between the two surplus numbers on page 6, and this slide summarizes that reconciliation. We start with a tax-supported budget surplus of $188 million that was reported to Budget Committee in the 2016 year-end operating budget variance report. We add in a number of items, including transfers to reserves and reserve funds required by legislation or directed by council, various adjustments for non-cash items, as well as adjustments required under accounting standards, including changes in tangible capital assets, to arrive at an accounting surplus of $1.2 billion. So the two surplus numbers are different, but for valid reasons. And as I've already mentioned, the accounting surplus is not a cash requirements surplus because it includes non-financial assets, largely our net investment in capital and infrastructure assets, which cannot be sold to generate money for any other purpose. I would now like to turn over the presentation to Sandra.
Good morning, everyone. And thanks, Mike. Thank you for the opportunity to let me walk you through some of the highlights of 2016. I'll start with the tangible capital assets. So as Mike indicated, the tangible capital assets at the end of 2016 is actually quite a significant number for the city, and it's critical to the city's ability to deliver services. For accounting purposes, the city's capital assets are recorded at historical cost, and they're depreciated over the expected life of the respective assets. So as you can see from this chart, the city has, at the end of 2016, $44.4 billion in tangible capital assets recorded at historical cost, an accumulated amortization of $15.9 billion, which leaves a net book value of $28.5 billion, which is $1.5 billion greater than the 2015 financial statement value. The $1.5 billion increase can be attributed to $2.6 billion in capital asset purchases, offset by $974 million in 2016 amortization, which leaves the increase in net book value of $1.5 billion. That increase is actually largely related to assets under construction. So assets under construction in 2016 equal $5.6 billion. And I'll just go through what the main combination of that is. The main components are the TTC assets, valued at about $3.9 billion, which is approximately $2.7 billion in subways. City assets of $1.4 billion included in this number are almost half associated with water and wastewater infrastructure. TCHC assets of $142 million relate to building and building improvements, and about $98 million relate to Toronto waterfront assets. The next highlight relates to the employee benefit liability. So what we've provided you in this slide are the liabilities by entity, by year, broken down by gross and net liability amounts. So as in prior years, employee benefit liabilities actually remain a significant focus for the city. These liabilities represent the largest partially funded liability within the city's financial statements, next to mortgages and debenture debt. In the financial statements, note 13 actually is dedicated to providing additional information related to this liability. You'll note that the $99 million, or 2.8% increase over the 2015 gross amount, is made up of two components. A $52 million increase is the result of post-employment benefits, primarily due to a change in the discount rate, which has resulted in an actuarial gain and an increased liability, and a $47 million increase in workers' compensation benefits, which is primarily due to additional coverage requirements for work-related cancers for Toronto firefighters, coupled with the increase in administrative fees. The unamortized gain or loss amount is the balance of actuarial gains or losses related to the valuation of employee future benefits liabilities. These amounts are recognized over the expected average remaining service life of the employee group. The net liability of $3.8 billion has increased by $158 million over the 2015 value, mainly due to the unamortized gain or loss adjustment against the gross liabilities. The actual unamortized actuarial gain has increased by approximately $59 million in 2016 as a result of an increase in the discount rate and the difference between actual and expected benefit payments in 2016. The next area of significance highlights the net long-term debt and mortgages balance, details of which can be noted in notes 11 and 12 of the consolidated statements. Our net long-term debt increased by $179 million as a result of approximately $755 million in debt issuances, offset by repayments of approximately $511 million and sinking fund earnings of approximately $65 million. The debt repayment of $511 million mostly consisted of about $412 million of repayments to city debt and mortgages. What we've provided you in this next slide is debt issuance by service area in 2016. As you can see, approximately half of the issuance support transit assets, and over a third of the issuances are for a 30-year period. This next slide provides a 5-year summary of net debt and tangible capital asset values. As you can see, over the last 5 years, so basically between 2012 and 2016, net tangible capital assets have increased by $6.5 billion to $29 billion, which is an average increase of 6.6% per annum. Net debt has increased by $2.2 billion to $6.5 billion, which is an 11.2% average increase per annum. These increases indicate clearly that the increase in net debt is directly attributable to our continued investment in tangible capital assets. So it's important to note that the value of tangible capital assets will continue to increase as assets acquired in the 1950s and 1960s are replaced at 2016 and future year prices. For this reason, the city continues to improve its financial position as debt through the capital budget process and capital financing strategies. The city must ensure that as we continue to invest in assets and infrastructure, debt is maintained at an affordable level. We wanted to provide you some comparisons between Toronto and other major cities in Canada. So as you can see from this slide, the city compares favorably in its investment levels, while its net debt levels compare unfavorably to all. So now I just want to tell you about some upcoming changes to to public sector standards that will impact the financial statements. The Public Sector Accounting Board continues to work on standards that are issued in future years that will impact the city's consolidated financial statements. As new standards are developed, the city spends considerable time and research determining the impact of each new standard on our accounting and statement presentation. Standards can be considered for early adoption depending on the events impacting the city's financial position. Please note that standards only apply to material items in the financial statements, and therefore some of the standards may not have a material impact on the city's consolidated statements. So thank you for the opportunity to present these highlights to you, and I'll turn the presentation back to Mike.
Thank you, Sandra. In conclusion, the consolidated financial statements provide comprehensive information on the city's financial performance during 2016 and its financial condition at the end of the year. The city's finances support its good credit rating. However, during the year, the city's net debt increased $418 million, and slide 24 shows that it has increased an average of 11.2% per year over the last 4 years. There's been considerable discussion about the city's long-term financial direction, and I don't intend to review that here, other than to advise that these financial statements are based on historical data as at December 31st, 2016, and for the period then ended. Our key challenges, including maintaining our significant assets and infrastructure in a state of good repair, investing in priority services and infrastructure as the city grows, and funding our operations from existing sources of revenue, are not reflected in these historical financial statements. On a closing note, I am proud to advise that for the 10th year in a row, the city has received the prestigious GFOA Award for Financial Reporting for its 2015 financial statements, and we intend on winning for 2016 as well. Staff work very hard to meet the highest standards of financial reporting, which is not an easy task when you have over 123 entities to consolidate into the financial statements. I want to thank and acknowledge the outstanding work and commitment of the accounting services team in preparing the city's consolidated financial statements and the annual financial report, particularly Sandra Calafretti, the Director of Accounting Services, Shai Rose Murgy behind me, the Manager of Financial Reporting, Stella So, who is here, the Supervisor of Financial Reporting, as well as Manel Daniel, Chris Phillips, Selvin Mogan, and Jennifer Kim. They all played a key role in preparing these statements. I have one final point. This is our CFO, Roberto Rossini's last audit committee, and I believe the tradition is that he fields all of the questions.
You can see the tears rolling down his face. Thank you, Mike. Thank you, Sandra, and thank you to the team. I will ask the committee if there are questions of the treasurer, the director, or the PwC team. I have on that list Kathy Russell, Michael Houghton, and I believe you introduced Yurok and Omar. Seeing none, are there any speakers on this item? Seeing none, may I have a motion from the committee that we recommend that City Council adopt the staff recommendations? Councillor Lee, we'll fit you in on that with a motion. All those in favor? That's carried. We now have AU 9.2. I have a speaker listed, Derek Moran. Derek, you have 5 minutes.
So I once came across this somewhere on the City of Toronto's website. Discusses the sinking fund. And at the bottom there, it says the City of Toronto sinking funds is exempt from income taxes under Section 149, subsection 1 of the Canada Income Tax Act. And I read that and I remember thinking to myself, hey, Rob Rossini once told me while sitting chatting with him in his own office that the City of Toronto was a municipal corporation, emphasis on corporation. And isn't a corporation supposed to pay taxes on any profit they make? What gives? So I started doing a little digging, I did some research, and this is what I came up with on why the City of Toronto gets tax exemption status from the CRA. Now, just so everyone knows, I'm going to be reading a bunch of these off. That picture is Donovan Waters. There's a federal court tax case that says that he is the seminal authority on trust law in Canada. A Superior Court justice told me that his well-regarded text, The Law of Trust in Canada, is the one that they all use throughout Canada to reference anything regarding trust law. So he mentions that the Federal Income Tax Act provides that tax exemption is given to entities whose objects are and whose activities remain within the common law meaning of charity. The charity must also be resident in Canada and have been created or established in Canada. Whether by right of Canada or the provinces, the Crown, this is my favorite part from the book, the Crown is a charitable purpose because its sole raison d'etre, that's French for reason for existence, reason for being, is the public benefit. The essence of charity is the public benefit, and relief from taxation, why City of Toronto gets tax exemption status, and relief from taxation reflects that benefit. The list of accepted donees includes registered Canadian amateur athletic associations, resident Canadian corporations providing low-cost housing for the aged, Canadian municipalities, the United Nations and its agencies. For the common law definition of charity knows no national borders. These institutions might be described as borderline charities. Head of charity. Now this is a guy a long time ago, Sir Samuel Romilly, from the Donovan Waters Law of Trust in Canada still. Sir Samuel Romilly said almost 100 years earlier in Maurice versus Bishop of Durham, Sir Samuel Romilly had argued that there was a fourth head, which is the most difficult of charity, the advancement of objects of general public utility. It was when he gave to classify these miscellaneous group of purposes that the only theme Sir Romilly could find was that of general public utility. Under the law of charity, if the nature is charitable, then its activities must be charitable or be ultra vires. You used that at City Council once, Councillor Haldane, beyond the power or scope of authority, it's Latin. In the property tax legislation, just like the income tax, ultra vires activity is struck out by the withdrawal of tax exemption. Ooh, we hate to have that happen here at the City of Toronto. The whole purpose of the office of trustee is the administration of property on behalf of others, and therefore the office holder must be compellable to perform his task. In other words, the essence of the trustee's position is obligation, an obligation owed to the trust beneficiaries, that would be us, the people of Toronto. A trustee must act honestly and with that level of skill and prudence which would be expected of the reasonable man of business administering his own affairs. And this is a guy named Lord Eldon. Lord Eldon's principle remains as valid as ever. The concept of the trust assumes the fundamental feature of a beneficiary who can enforce it. This was from a police consultation at City Hall that Miguel was there. He was sitting right behind me. The question I asked for the police was, the answer I got was, if you're talking about the person who's charged, then the answer is yes. My question for the police officer was, Scott Duncan says the Crown is the surety for the person we all have. Is that true? And Councillor Greb knows that she has a couple of emails from the Register General's office I gave to her assistant Victoria, where they refer to me as Derek, sole living beneficiary. So people can put that together.
Thank you. Are there questions of the speaker from the committee? Thank you for speaking to us. Are there any other speakers to this item? Seeing none, I'll take this into committee. Are there questions of staff on this item? Are there any speakers to this item? May I have a motion that we recommend that City Council adopt the staff recommendations in the report? Councillor Lee? All those in favor? That's carried. AU 9.4. Financial statements for the year ended December 31st, 2016, agencies and corporations. And I believe, Councillor Matlow, you had held item 4C, Toronto Parking Authority 2016 financial statements. Did you have questions of staff?
I'm actually going to continue holding that for the moment.
Okay.
I'll release it after we deal with another item.
Absolutely. Thank you. AU 9.5, status of the financial statement audits of the city's agencies and corporations for the year end December 31st, 2016. We have a speaker, that's Florence Lutel. Florence, are you here? I apologize, I'm not able to hear you. Thank you very much. Are there any other speakers to this item? Seeing none, do we have questions of staff on the item? Seeing none, would anyone like to speak on the item? Seeing none, would someone please move the recommendations that City Council adopt the staff recommendation? Councillor Carmichael Greb. All those in favor? That's carried. AU 9.9, Real Estate Services Division, restore focus on Union Station leasing. I believe the Auditor General has a presentation on this.
Thank you and good morning. I'm going to actually have my Assistant Auditor General, Ina Chan, assist me. I have a little bit of a cold today. I'm going to also ask the Senior Manager, Bruna Korbeski, and Nero Mahovovich to assist us also. So Union Station is one of Canada's key gateways to Toronto, and the station is currently in the midst of a major revitalization. It's a big undertaking for staff, no doubt. And despite the construction at the station, it's continued to operate as the country's busiest multi-modal transportation hub. There's a total planned capital investment of $800 million, and the vision is for Union Station to become a destination for dining, retail, special events, and culture, along with being a transportation hub. There are two key parties responsible for overseeing Union Station. One is the city's real estate division, and that's headed up by Josie Scioli's team and Joe Casale. And Joe Casale is here. And the second is a private company. And it's not uncommon for city and large governments to work in concert with organizations that have key expertise in certain areas, and it can be a very good thing. So the real estate, in 2009, there was 2 agreements put into place in relation with this private company. The first agreement related to the private company assisting with the leasing with the current people who were leasing the station while the revitalization was happening. And the second agreement from 2015 onward. So the first agreement was from 2010 to 2015, and the second one was from 2015 onward, was to turn over the leasing activities to the private company with special expertise, and to allow them to be the head lessee, and they would find the people to lease the space and provide the city with its section or its cut of the revenues coming in. Now, this diagram that we're going to put up shows that the occupants of the public spaces and the Great Hall level. And what you'll see is highlighted in orange. The head lessee is currently operating 4,000 square feet of retail in the Metrolink space, as well as there's future retail space expected. So if you look at this, the colors, the orange is what's leased now. We're moving from 4,000 square feet to 165,000 square feet. This project in this time that we're doing this audit is important because we're moving from into a zone where we're going to have to make sure that we have the skill sets on the ground to properly manage and oversee this operation. And it's important to get things aligned now so that as we move forward, we're getting the best value for the city. In addition, we see 9,100 square feet of city-owned commercial space that has been turned over to the head lessee and is being ready for future tenants. So, on the next slide, it's important to know that at this time, we're not questioning the quality of the agreement in place. Time changes, and in 2009, this was the agreement that was negotiated. What's important now is as we move forward to make sure that we have the skill sets on the ground to be able to make sure that everybody's abiding by the agreement as we move forward, and we're getting the best value from that current agreement. When organizations, governments contract out in large outsourcing contracts, and I know this because I used to manage the largest outsourcing contract in British Columbia, which involved all of the revenue collection, all of the IT services for the government. It's very challenging to move from doing the service into actually overseeing it. The skill set changes. And so what you have is you need more of a legal expertise and audit expertise in order to make sure that the agreements are complied with, and that when the head lessee would want changes, that we understand what the impact is throughout the agreement. So now is the time to get that skill set in place. I think that's it. I'm going to turn over to Ina now to look at the objectives and to continue on with this presentation.
So what I'm really going to take you through is the meat and potatoes of the report. And just to start with, how did this audit originate? So during our audit of city cleaning services, it was brought to our attention that operating costs were not being recovered from occupants. And an audit of Union Station operating cost recoveries was added to the work plan in late 2016. As we moved forward with our audit, we broadened the scope to include a review of leases, which includes the head lease, for the purposes of ensuring leasing revenues and operating costs were settled between the city and each occupant in accordance with their agreements. So really the overall theme of our findings is that there's a need to resolve past leasing administration issues and then turn attention to setting up the right control framework to oversee future operations. So it's really just cleaning up the past and setting yourself up for success going forward. This is, as Beverly, the Auditor General has mentioned, this is particularly relevant as the city moves forward with the citywide real estate service delivery model, which the model is supposed to include a citywide retail lease strategy. So as part of the citywide transformation, it's important to figure out who will be responsible for leasing administration at Union Station and who will oversee the long-term head lease. Now is the time to ensure the city has the right people and the right skill sets to oversee the multi-year, multi-million-dollar contracts and revenue streams that Union Station is expected to bring into the city. So we've grouped our audit findings into three main categories. The first category is that immediate action is needed to remediate leasing activities, so it really focuses on fixing the past. The second category is to ensure robust financial analysis informs strategic decisions, and this really focuses on setting up the right financial models and forecasts for the future. And then the final category is to improve oversight of commercial operations. So this is to focus on ensuring the results from the head lease are what we expect it to be. So for the first category, this of remediating past leasing activities, what we've done on the slide is to provide you an overview of the typical annual leasing administration activities that we expected to be performed and in accordance with the agreements, but were not. Annual leasing administration activities are typically cyclical in nature, and in very simple terms, on an annual basis, before the start of the year, the city should be telling occupants what they think they should pay for rents and recoveries for the upcoming year. Throughout the year, the occupants make regular payments towards that amount owed, and then at the end of the year, the city figures out how much it's actually spent, and then compares how much it's received in installment payments against the total actual amount due for rents and recoveries for that year. This is the annual settlement. So the city has always collected installment payments. They've always, along the way, collected installment payments for rent, additional rent, and operating costs. However, the city has not performed annual settlements with each of its occupants, although it was contractually required to do so. So nearly 4 years have passed since the city's last settlement with Metrolinx. At the time of our audit, city staff were working on the settlement for the period covering from mid-2013 to the end of 2015. The determination of how much is actually owed by Metrolinx continues to be a work in progress. Similarly, 5 years have elapsed since the city's last settlement with Via Rail. In November 2016, the city calculated the amount needed to settle rents and recoveries for the years 2012 through 2016 and communicated this amount to Via Rail. As of May of this year, no payment has been received and the matter is still unresolved. We also found that city staff did not know if amounts were owed to or due from former retail tenants for the period from 2010 to 2015. So this is the retail tenants that were in the station before the construction, revitalization construction started. And there's no evidence that settlements were performed for those years. Finally, given where we're at, middle of 2017, according to the agreements with the occupants and tenants, the 2016 settlements are due around now and should really be completed now for the past year, and occupants notified of any amounts owing. So our report includes an estimate of the impact of the settlements that were not performed annually. The city may be able to collect $9.4 million in leasing revenues related to prior years, but it is still a work in progress. Work has to be done before the city can be certain of the amount to be collected. Just to be clear, even though the settlement processes have not been completed, this does not mean that this is lost revenue. Management has acknowledged that the settlements are late in being completed, but that all parties, city, Via Rail, and Metrolinx, knew these settlements needed to be done, and they did expect to receive that future payments would need to be made.
And on that, that's additional funds for the budget and a receivable that would be coming in. So although it wasn't going to be lost, we can at least recognize it from that perspective, from a planning perspective.
In addition, we also estimated that as a result of the delayed collection of these funds, the city has missed out on the opportunity to earn a return on capital of $740,000. We do consider this lost revenue. So furthermore, had these funds been collected and used to reduce the amount of debt needed to fund the capital requirements of the revitalization, carrying costs for that would actually be much higher than what we've put down as an opportunity to earn return on capital. Okay, further work in settlements of the settlements and process is still needed before staff can confirm how much is actually owed. Some of the concerns we raised regarding the assumptions used for the settlements underway still need to be addressed. In addition to the settlements, during our audit, we also identified other basic leasing administration activities that weren't performed. So if you go back to the annual cycle of leasing activities on slide 9, which we had there, many of them had not been performed regularly, and that included making sure that data was accurate and up to date, and making sure installment payments were updated for any changes in the station and communicated to occupants.
And what this does is it provides a roadmap for the leasing strategy when it comes in as part of the real estate strategy, citywide strategy. So in that area, these are the things that would be expected, and that can be folded in as a roadmap as you move forward.
On this slide, you'll see just a high-level summary of the past 5 years. So over the last 5 years, average annual operating costs was $12.5 million. That's the red line on this chart. And over the same period, average recorded revenues for leasing activities was nearly $12 million. That's the blue line in the chart. So the couple things I wanted to highlight is that up to 2014, there was a operating surplus where revenues exceeded expenses at Union Station, so it was generating a surplus. And then after 2014, where you're seeing a deficit, this is because of the closure of retail space within the station, and that was expected as construction was happening, that the former retail space would be closed. This chart also does not consider pending settlements with Metrolinx and Via. The other thing that I wanted to highlight was the average total operating cost recoveries. It's that section in orange at the bottom was $6.3 million. And together with the property tax revenue recoveries, that's in yellow, those two sections, what you're seeing is that there's about 54 to 68% of the total operating costs that are being recovered from occupants and tenants. So of the red line, the orange and yellow is what's being recovered. So what you're seeing then is that the areas in green, that's the basic rent revenue. That's what's paying for any shortfall for operating costs that aren't recovered from tenants and occupants. This chart can also be found on page 12 of your report. Determining the appropriate allocation of operating costs to be recovered from occupants is quite complex. And this slide lists factors which management has indicated it adds to the complexity of determining each occupant's fair share of operating costs, and therefore can impact the ability to finalize settlements. The complexities of determining each occupant's proportionate share of operating costs emphasizes the importance of having in place an appropriate financial models and analysis. This is the second category of our findings. In particular, the complexities of Union Station increases the risk that costs may be incorrectly or disproportionately passed on to occupants or absorbed by the city, and emphasizes the necessity of having a methodology or model for cost allocation. The city is also specifically at risk for absorbing any shortfalls in operating cost recoveries related to commercial operations. These shortfalls may arise as a result of a contractual cap which limits the extent of operating costs that can be recovered through the head lease. Using the city's 2009 forecast, we estimate that on an annual basis, the city would absorb around $2.5 million in operating costs that would not be recoverable because of the contracted rate cap.
Right. So just bringing you back, it wasn't meant to be necessarily a full cost recovery. It was a transportation hub that had the rental of space and the leasing of space to support that. But what's key here is that the agreements are complex. When there are costs that are going to be incurred, it's important to know exactly the impact of those costs and how it's going to, whether the city's absorbing the full cost or whether it is a shared cost, so that you can negotiate in the appropriate manner. So that's just important.
The other thing I wanted to emphasize that this is just a shortfall in the recoveries of operating costs, just as we showed in the chart on slide 12, where historically rent revenues have been able to offset the shortfall, so there continued to be a surplus. Going forward, management also indicates that revenues from the commercial operations are expected to be sufficient to offset any shortfall in the recoveries of cost, as well as to pay off recoverable debt incurred for the revitalization. Okay. In addition to operating costs, it's important to have appropriate financial analysis and forecasts of revenues. So the east wing of the station is a significant example where robust financial analysis of potential revenue impacts is needed. The east wing, and in particular the second, third, and fourth floor of the east wing, hold a significant amount of rentable area in Union Station. The former east wing anchor tenant decided not to renew their lease over 2 years ago, and since that time, the city has not made a strategic final decision on what to do with the space. To avoid opportunity costs, the ideal scenario is that the east wing would be fully occupied when the revitalization is complete next year in 2018. Management has indicated there are ongoing discussions with the head lessee, who is currently preparing proposals on the use of this space. Whatever management decides to do, it will take time to plan, design, and prepare the space, and 2018 is fast approaching. Management also indicated that there is likely to be a significant investment required to bring this space up to a leasable state. The upper floors of the east wing were not included in the revitalization project, so funding sources will be needed to be identified if that space needs to be renovated. Okay. The capital and operating financial implications for the different uses of the east wing space, be it for city purposes or commercial uses, must be evaluated in making a strategic decision that maximizes the value for the city. Overall, the financial forecast models and underlying assumptions should be updated. So the financial models for Union Station need to be updated to reflect current conditions and to provide a comprehensive understanding of potential revenue streams and operating costs for Union Station going forward. This is particularly important when evaluating the station's overall financial performance, as well as the specific performance of commercial operations under the head lease. And thus brings us to our third category of findings, the need to improve oversight of commercial operations. As mentioned by the Auditor General at the beginning of the presentation, in 2009, there were 2 agreements that were entered into with the private sector company, a leasing management agreement for the periods from 2010 to 2015 and a head lease of the commercial premises. So from 2010 to 2015, the private sector company acted as a leasing manager on behalf of the city to manage the city's retail operations before construction. There are some unanswered questions pertaining to the financial results for this period, and we've recommended an independent audit of the financial statements for retail operations as an effective means of addressing these questions, as well as other questions management might have. Although the head lease was executed in 2009, actual retail operations under the head lease only began in late 2015. The anticipated 165,000 square feet of commercial space is being turned over to the head lessee in phases, and this space is expected to bring the city a present value of approximately $168 million over 30 years, and this is really about $12 million per year once the space is fully operational. It's the head lessee's responsibility to operate the commercial premises in a manner that is designed to maximize revenue, and it's city staff responsibility to monitor the results so to make sure the city is getting what it expects from commercial operations. It's important during these startup phases to get this framework for monitoring and control set up well. Strong controls, such as having a comprehensive financial model, reviewing forecasts, budgets, financial results, and audit financial statements with an independent and appropriately questioning mind are key controls to protect the city's interests and to make sure the city is receiving exactly what it expects to receive. So in summary, we've made a number of key recommendations. First, to resolve past leasing administration activities. So to resolve the past, staff need to ensure annual settlements of rents and recoveries are finalized, recorded, and collected on a timely basis. And then also to ensure data in the leasing module of the financial information system is accurate and up to date, and then kept current going forward. Attention then can be turned to future operations, And the key here is to ensure financial analysis and models are in place to support strategic decisions. This includes setting out the cost allocation model for determining each occupant's fair share of operating costs and the extent of costs the city is willing to absorb, determining the plans for the East Wing and the financial implications of that, both operating and capital, and then updating financial forecasts. On page 2 of our report and on this slide, we summarize our estimates of the financial impacts of key recommendations in the report. In conclusion, our report contains 21 recommendations that focus on restoring the focus on Union Station leasing. Management has agreed to all 21 recommendations, and action plans are included in the appendix to the report. The other thing I wanted to highlight is that there is ongoing work on certain matters arising from this audit, and they may be reported upon separately in the future. Because of the findings in this report, as well as other leasing administration issues that we identified in some of our other recent audits, including our audit of water billing, we have added to the 2017 audit work plan an audit of city-owned leased properties. The scope of this new audit would cover not only other properties within real estate services portfolio, but also leased properties managed independently of real estate services.
And I just would like to add, the staff have been exceptionally helpful through the process. To revitalize Union Station and to oversee that project, it's a big job. In addition to changing the entire skill set from doing the leasing to now overseeing the leasing. And I'm confident in Josie and her team that they will take this as a roadmap to bring all the leasing activities across the city together to make sure that there's a focus on and their eyes on the ball in relation to keeping the administration of the leases in addition to the revitalization, keeping your eye on both sides. So with that, we're finished. If there's any other comments from management or...
Thank you to the Auditor General, Ina, Bruna, and Nero. Are there questions of the committee for the Auditor General, the Assistant Auditor General, or the Senior Audit Managers on the presentation, or to the city staff? Councillor Matlow, I had your signal first.
Thank you, Mr. Chair. And thank you for both a thorough report and very, very sensible recommendations based on your findings. What I don't fully understand yet, though, based on your observations, to say it candidly, and I'll ask the same of staff in fairness, based on your observations, how do you explain what seems to be complete and utter incompetence with respect to managing this file effectively from the get-go? It's good that you've made recommendations and you're working very well with senior staff to make sure that there's a framework set up to move forward. But it just seems, though, that from the get-go of this reconstruction and then putting together a mechanism to ensure that that the city receives the revenue that it should be fairly receiving, it just wasn't done. It wasn't done, and it certainly wasn't done well. So based on your observations, what went wrong? Like, why didn't it work?
That's really a question for management, but one of the things we did see was there was a number of staff who changed, and we found it challenging to get some records, and so I can't answer your question totally. But I'm going to turn it to management.
To both, yeah.
Yeah.
If I may just start with just a comment. Respectfully, I would say that to characterize this as staff being totally incompetent is unfair. You have to realize what's happening at Union Station. That building, 100 years old, was being totally opened up. The spaces that were actually being leased are constantly changing as leased areas are being reconstructed, so you can no longer change that. Common areas are being created to have new passages and passenger flow. So it wasn't a fact that here's a 10,000 square foot building, I just didn't charge them. This square footage that's being charged is constantly changing. It's shrinking, it's expanding, common areas are created as parts of the station are constantly being redeveloped. So that's just the base from which we're supposed to charge. What we're supposed to charge is constantly changing. You're opening up holes in the building in the winter, cold air comes in. You're opening up holes in the building in the summer, hot air is rushing in. You've got contractors there using electricity. So all that has to be sorted out in terms of what is properly chargeable to those tenants in terms of space and in terms of cost. Should we have done a better job? Absolutely. Should it have taken 4 years? Absolutely not. But to just characterize it as, we didn't know that this was happening. We had started that work. We had communicated with VIA and with Metrolinx. So we were on it, but we were slow. Absolutely. But I think it's a little unfair to characterize it as total incompetence. That's all. A bit of understanding on the complexity of what's going down at Union Station is required.
And may I add something to that? I do agree that it was a very complex file, there's no doubt. And as I mentioned from the get-go, my experience is when you're doing a change like this, you can not get it right the first time. It is not uncommon. And to bring a whole different skill set in, not because it's just the skill set changes. So in our operations in BC, we went from a financial skill set to a legal, audit, financial skill set. We had to change it over, and I think that's what's needed here because you have complex leases, operations are impacting it. So I look at it as, I'm glad we're here now to, at least provide that recommendation to get the right generals underneath Josie.
May I just add, and I'll turn it back to Josie. My words were that it seems like complete and utter incompetence. You're saying that it's not. But I still don't understand. I mean, I'm not pointing fingers directly at you, but I just mean over the course of several years, it didn't seem like it was a surprise that spaces would fluctuate, that needs would fluctuate, and that there just doesn't seem to be a plan that I've witnessed that was able to sort of execute this in a way that understood some of the challenges that would be coming and deal with them well. And it seems like after the fact, due to the report that we've read from the Auditor General, now we understand retroactively that there were those issues that, as you said, they were slow sometimes to be acted on. And it just doesn't seem to be handled very well. And it's okay to admit that if that's true, but I hear some defensiveness too.
So if I may, through the chair, I would say yes, we could have handled it better, but I would say that the file, as complex as it is, it's hard to actually imagine unless you actually live it. And one of the things that this team has done is spent a lot of time with these specific organizations, working with them on the settlements and the reconciliations. It's taken a long time. We would have liked to have done it faster. The Auditor General said we did lose some staff. That's our issue, not obviously your issue per se. But we will get this obviously resolved and settled. And the path forward is what we're looking for. The Auditor General did not have to tell us this. We actually knew this was happening. We actually just tried to accelerate it through the work that the team has been doing. So I would say that
When you say lose staff, like was there a lack of
We had a change of
coordination?
staff.
Was
We
there
had
a
a
lack
change.
of coordination or lack of communication?
we had a change of staff going through the on the file and trying to get specific skill sets as it's changing, which is what we're trying to do. And as we do move toward the citywide real estate review, as you guys obviously know, that is part of the discussion we're having around the actual leasing strategy and the actual structure we're putting in place. So I think the important part is we're moving in the right direction. The staff did work to get this reconciled. They're almost finalizing it, but by 2017 it will be done, and that is our commitment to council and to committee.
Councillor Ford?
Thank you, Mr. Chair. Just a question for the chair of the committee, just to confirm, this document has been made public. This is the attachment to,
Different item.
okay, that's what I want.
That item is, that remains confidential.
Okay, so that will change my line of questioning quite significantly. So the shortfall specifically is due to operating costs that the city has taken on Union Station. Is that correct? It's the operating costs.
Yes.
That's correct. And so through these leases, sorry, it's, I just have to be very careful that I don't reference the confidential documents here. So to understand this, wasn't there not a plan for the revitalization and how we were going to go about changing the lease agreements at the beginning?
So through the chair, yes, there was a plan going forward as the way it was set up was construction was supposed to happen, and then we would turn over the retail space to our head lessee, okay?
Right.
Construction took a lot longer than we thought it would. In a building of this age, you ran into problems that you wouldn't even know existed. So what started to happen was we had let go all of our tenants, and as space is becoming available, we started to say to ourselves as staff, we should be turning over space as it becomes available to start generating new revenue. So this part of it had to all be negotiated with the head lessee to say, we're going to change the monies that you're going to be paying us in one lump sum to a proportionate share. Every 16,000 square feet we turn over, you're going to pay us $1 million instead of a lump sum of $10 million, for example, okay? So there were a lot of amendments to the original agreement as we went through the construction that had to be taken care of. In addition, we're negotiating new businesses within the station. We're negotiating sponsorship agreements with Osmington. There was an agreement for advertising. There's an agreement for new Wi-Fi that's going to be connected to VIA, Metrolinx, and the city. So the city is negotiating all these other agreements at the same time as we're supposed to be taking care of the operational situations. So I'm not making excuses. What I'm saying is there's a lot on our plate, and what we're trying to do is prioritize each of the matters as they're coming forward. And I truly believe that the monies that Metrolinx and Via Rail owe us, we will be able to achieve an appropriate settlement to get those operating costs back.
Right. So you've mentioned Metrolinx Via Rail. I assume they are not our only leasing partners in Union Station. Are there other?
Our only other tenant will be Osmington. So when the station is complete, and now actually, our tenants are Metrolinx, Via Rail, and Osmington.
Okay, and so moving forward, which I'll make a quick comment to this. I should have done it at the beginning, but I think the Auditor General has done a phenomenal job here, laying out a path forward. Now, having said that, moving forward, it has been mentioned that we do have the citywide real estate review underway. How is this report recommendations going to play in to that?
So through the chair, we actually have been looking at the overall structure of the new citywide model that we went to council with, and the leasing strategy and the approach we're taking. We're taking some of the recommendations, obviously, that the Auditor General gave us as part of the pathway and structuring it as part of the work we're moving forward with.
Okay, thank you very much.
Are there any other committee members that wish to ask a question? Councillor Lee.
Thank you. With 3 tenants, do we have a professional project, a property management company managing the space?
Osmington is a retail management company, yes.
Okay.
We do.
So they are doing the property management for us.
And what we would expect from Osmington, when the station normalizes, we would have Osmington report to us on an annual basis. We would understand all of the tenants. The auditor has indicated to us that she wants to know all the tenants that are part of the umbrella of Osmington. So we would review and audit Osmington statements each year.
Okay, thank you.
Are there any other questions? I would like to ask a couple. I just want to understand a little bit better about the uncollected rent over the last few years. Is that rent as in rent profit? I think it was the green bar on the chart, or is it operating costs that we have not recovered, recognizing that one is a component to the other?
It's almost completely operating costs.
Completely, so was there an income stream at all from some of these tenants, and it was the operating cost component, or do we only charge those tenants an operating cost?
If I understand your question, we had an interim management company that would be collecting both the rent and the operating costs. The interim management company, we were wanting, it was a corporation of Osmington, and we wanted Osmington to start to understand how the business operated, how Union Station operated, who all the parties were. So we were trying to educate Osmington at the same time. So this was a learning process for both the city and for Osmington.
So did we have zero gross income during that period, or are we only talking about a component of the gross income?
We had gross income. We had gross income and still continue to have gross income.
Okay.
Because now the tenants are coming, Osmington's getting tenants back into the building.
With respect to not collecting about $9 million worth of rent, is that because the tenants that owed the money objected to paying the money, or was it because we didn't charge them?
It's because we did not charge them.
Could we have and I understand that I guess there's some negotiations, so some component of that money is under dispute, is that correct?
It will be a negotiation, yes, because during the last 5 years, the building's been under construction. So as Rob Rossini was saying, the city's using the building in a different manner than it would normally be used as. So our costs are probably a lot higher than they should be. So the tenants would probably say, I want the city to pay for that component. And what we've determined is that in the private sector, what they do is when they have a project like this, what they do is they abate the rents for all the tenants.
Right.
Okay, so they drop the rents because they know there's inconvenience, there's business loss, there's all kinds of different things going on. So instead of trying to track all of this, they abate the rents. So anyways, all I'm saying is that, it will be a negotiated deal to recover those funds.
So we, as a city, suspected or knew that the operating costs were increasing because of what was happening in the station.
Yes.
We expected that the tenants would object to the increased operating costs, and as was stated, there were holes in the wall and things that perhaps were outside of their control. Why did we not then just charge the 2013 rate going forward, knowing that would be a lower amount? All things being equal, we'll just continue along the path, and then we'll settle the last few percent at the end. Instead, it sounds like we got nothing, and thus we have an interest cost.
We were charging them approximately, between the two major tenants, approximately $8 million a year of the 12. So.
Okay, so we got something. It's not that we got zero, we got something, and
No,
now
they
we
were
have to
paying
close.
every year what we had asked them to pay.
Will they pay us interest on the open amount?
That'll be part of the negotiation.
I'm keeping an eye on my time. I'm interested in the 100,000 square feet of space in the east wing. Is that retail space or something that is an office-type space?
The way the agreement is set up is that the city has the first opportunity to use the space. So if we want to use it for our city purposes, we can. If the city doesn't want the space, then Osmington has the opportunity to use that space. And we would be able to vet what they would be putting in the building. We would be able to vet the, I'll say, the rent proposals, that type of thing. And if Osmington does not want to use the space, then Metrolinx is third in line to be able to use that for office space.
For office space.
So,
As a portfolio basis, do we have any other assets that is anything like this model where we've got retail and office space that we are renting out, albeit through a head lessee and directly? Are we in this business anywhere else in the city, and how does that fit with our real estate strategy? Is this an oddity, or is this going to be an asset that is similar to other things that we have, and thus will have an internal competency to deal with these type of assets?
I would say for us, it's an oddity. The
Okay.
closest thing would be St. Lawrence Market that we operate.
Okay, thank you. Is there anyone on the committee that wishes to speak to the item? Seeing none, is there anyone that wishes, I'm sorry, Councillor Lee?
Thank you very much, and I'd like to move the motion and thank the Auditor General and city staff for the work they do. And although it may look like, things were not perfect, but I think they have done as best they can, because there are a lot of moving parts at the union station. I've had the opportunity to visit it, and there were things that when they were building, they were discovering that what they expected was not what it was. So there are a lot of moving parts. So it's a moving target. So staff is doing as best they can. That's why I asked whether they have a head leasee that is managing the property for us. Anyways, I move the staff recommendation then.
Thank you. Councillor Matlow.
My experience has been, whether it be a large water main replacement project or a playground revitalization, that there's always something. I mean, there's always something. There's inclement weather. You hit an underground river. I had a park in my ward where we couldn't reopen it after we revitalized it because we had the driest summer in years and the seeds wouldn't take, and we had to keep it snow fenced for many, many weeks. And people were more frustrated about it not opening than pleased that we actually invested in improving it. And I think it's reasonable to not only suggest but even predict that when we're taking on major infrastructure projects of any kind, that there is going to be something to deal with. And in this case, with a heritage building where there are, I remember there were even parts of the station due to the heritage components that couldn't be moved and the trains didn't fit. And there are all these issues to deal with. That it's fair to plan in a way where you are assuming that there will be problems. And it doesn't seem, and again, I use the word seem, but certainly based on what I read and based on what I've heard, that there was enough due diligence done from the get-go to predict that there would be even unexpected problems. In other words, the unexpected problems that you could expect to have. And when you're dealing with leasees, to work out, as there were questions by my colleagues that alluded to, could there have been other ways to not repeat what the private sector does, but certainly find variations to be able to find a way to work with them in a better way. And it just doesn't seem like that was done. I'm also hearing that there were staff changes that, while we can't and we haven't got into the details of, may have affected the way this all rolled out. This could have been done better. It should have been done better. I'm glad to hear that it's going to be done better. But it doesn't sound, it sounds like it's somewhere between, whoops, we should have done better, and incompetence. And I don't think it's I don't think it's fair to say it was only one or the other, but things have to be done better. And all I ask is whether it be a small playground improvement or a major capital project like Union Station, that if we think something's going to open up in March, let's suggest it's going to open in August, because it's probably not going to be done in March. And if there's going to be if we're dealing with leasees and we're dealing with third parties, then we have to have a plan moving forward that addresses the predictable situation that there are going to be problems coming up. And it just doesn't sound like it was done well enough from the get-go. I have a lot of confidence in Josie and her team, and I know that you're addressing all these things now, but there's no doubt that this could have been done better from step one.
Thank you, Councillor. I will, if there are no other speakers, I will speak very briefly as well. And I guess thank the auditor and the staff for their work on this report. I think it's a very valuable document, and I think it's a valuable document for council. And the reason I say that is in pondering the file, I wonder if we went astray many years ago in our strategic choice to develop Union Station. Our real estate folks are hard at work doing the core work that they do in the city, just managing our own tenants and managing our own facilities and providing some strategic planning. But many years ago, I understand council decided to become a developer and get into, yes, the historical and the train station business, but also the shopping concourse business. It was the decision of the council at the time, but the risks that come with that type of an operation are now following us to here, and they have been embodied in this document. And as these strategic decisions come up to council, I hope we weigh out all of the factors. And some of them, I'm sure, were talked about at the time, about the historical value. You know, the Great Hall is probably my favorite space in the entire city, and I'm glad it's being preserved. And the importance of it as a transportation hub. But you have to weigh that with the risks that come with trying to balance out the rent and the operating costs with running retail. And I appreciate that we went through a head lease on that. But we are in that position of landlord. We are in that position of dealing with flux in the space, and it's going to take a lot of resources to be a good landlord and to do our duty for the taxpayers of the city to collect all of that money and stay on top of the flux and the changes. So thank you for the preparation of this document. I hope it becomes one of the artifacts that we will look at as a council going forward as these great ideas come along over time, that this will be one of those anchor pieces to remind us about the risks of taking these type of decisions. With that, I will call for a vote on the motion prepared by, or placed by Councillor Lee to adopt the staff recommendations. All of those in favor? Opposed, if any? And that's carried. Thank you. With that, we will go to AU 9.11. That is the review of the Toronto Transit Commission procurement policies and practices, improving materials management and purchasing policies can potentially result in significant savings. I understand that the Auditor General has a presentation for this.
Yes, thank you, we do. I'm going to ask my Assistant Auditor General, Jane Yang, to present because of my squeaky voice. In addition, the people who worked on this audit, Claire Fang Mu and Thusha Arjurani.
Thank you.
While my team is getting set up, I'd like to recognize TTC being awarded one of the best transit agencies in North America. I think the award just came out today, and I think that's a feather in their cap. And I know, I mean, just as an opening statement, I know when we come to the audit committee, it's not always great news. But one has to recognize that TTC is in the process of transformation. And there are areas where transformation is happening, and there's areas where it's been 30 years, since we've been in the area, and it hasn't transformed. And what we have is a roadmap that's important because I believe there is a ton of savings there. But there's a roadmap there to assist. And after Jane speaks, I know that the new head of material management and purchasing, Ted Zloth, is here to speak. Okay, Jane, if you can please do this for me, thank you.
Thank you very much, Auditor General. So this is the first time our office actually take a in-depth look of TTC's procurement process. I just want to give you a little background. So the procurement, the materials and procurement department, M&P departments in TTC, consists of 3 sessions. Purchasing and sales, which has about 29 staff. Materials management has about 184 staff. And there's a third session is project procurement, which was not included in the scope of this audits, and we will audit the project procurement in future time. So on average, TTC purchase over 300 million worth of goods and services every year. So the procurement spend from TTC is quite significant. So our audit objective was to assess whether TTC procurement policies, procedures, and practices are fair, transparent, and cost-effective, achieving the best overall value. We did an in-depth review of the purchasing and sales sessions and extended into the material management session. Because the two are actually interrelated, some of the issues, we cannot segregate them. They are, like, we have to talk about both sessions at a time. So our data are based on usually 18, most of them are 18 months, some of them are 15-month operational data. So our key audit finding can be grouped into 3 areas. Improving vehicle part management, addressing chronic part shortage issues, and also the current procurement policies and procedures needs a full review. I want to put this graph on you. I hope you can see it. So this slide really sum up the major cost-saving initiative that we proposed. So in 2014, the number one that you see on the slide, in 2014, we did a bus maintenance audit. At that time, we realized the department did not fully claim the new bus warranty. And since then, the departments worked together with IT and a number of other TTC departments together. They developed a new system. This year, when we went back to 2016, they almost fully implemented this new process, 75% implemented, and they have already realized $5.8 million from better managing the new bus warranty. And this is annual recurring savings. So after a vehicle, the new parts, the new warranty come off, they expire. When a part fail, then TTC has to replace it, and they have to purchase a replacement part. And we're saying for most of, some of them, they have to purchase the replacement part from the OEM because some of them are proprietary. But there's about 70 to 80% of the parts they could purchase from alternate suppliers. And we know they can do that because in the past, they have taken small initiative and they purchased from alternate supplier. And every time when they did that, they save about 20% of the cost. And so this is highly feasible, but they haven't been systematically doing it. Of course, we're not saying TTC should just go ahead to buy from alternate supplier. They need to go through testing and make sure it's comparable product. So we're saying if they can just right now reduce about 10 to 25% of the purchases from OEM to alternate supplier, and assuming they can save 20% of the cost, that will amount to 2.5 to 6.5 million saving every year from alternate sourcing. Then
I just want to add to that. It also helps with potential delays if you can expand the source base. And the other thing is that there must be other companies, bus companies out there who are buying and testing parts from alternate sources. So there might be an opportunity to leverage some of the work that's being done in other large bus companies related to the same kinds of buses.
Thank you. And so when they replace the parts, right, from the original vehicle they purchased, and then when they need to buy a new part to replace it, all these replacement parts in the term is called aftermarket parts. So the aftermarket parts, just like when I buy my little Honda, when I need to buy a replacement battery, it also come with warranty. And we know that they haven't been really fully claiming this warranty. So of course, like we do agree with staff the majority of these aftermarket parts they purchase should not fail within, they should operate well within the warranty period. So, but a small percentage of them will fail. In fact, we look at the truck manufacturer, they set aside 2 to 3% of their annual sales revenue for warranty expense. And we did note, even when we analyzed TTC's work order, these aftermarket parts purchase, they do fail, a small percentage do fail within the warranty period. And so by not claiming the warranty, TTC forego a lot of revenue. So we look at, even if they just claim 2 to 3% of these parts fail, and they make sure they claim 80% of the 2 to 3% of the part that fail, they will realize 4 to 6 million annually in additional saving, like warranty revenue.
It's quite substantial. And just to clarify, the aftermarket parts are not necessarily, they could be, but not necessarily inferior. For example, Orion, who provides the the original buses, who provided some of the original buses, they have a full aftermarket parts section. Aftermarket parts, in addition to the TTC warranty required in the contract of 1 year, aftermarket parts can have several years, 2, 3, 4 years. And TTC, through the bus maintenance section, and I see Rich Wong is here today, he helped to set it up. They're already tracking warranties on the original parts, so there's a system already in place to leverage if TTC so chose, and there was good work done on that side. Okay.
Thank you. And our last saving opportunity is when these parts that fail, they took out of the original, the vehicle, that quite often there's a core there. Some of the parts, there's something, the critical components where the industry call it a core, they're still worth money. It's almost like when we buy a bottle of wine, you can return the bottle, right? But in here, the core worth much more than, the value can be quite significant, up to 25 to 74% of the cost of you buying a new part. So that core, TTC has not systematically retrieving it, and in a way they can lose money, also lose money. So we estimate, even if we look at a part, a core only, right? And because that's the data we have. And so far, if they lose 10% to 20% of this core over the lifetime of these parts, every year they will lose 1 to 1.5 million just from this A part. So I'm going to go into a little bit detail. I don't want to drill this on, but these are the four, the part management, the saving opportunity associated with better management of parts.
I'd just like to add something here, just to give you an idea of the magnitude. For the alternate sourcing and the aftermarket warranty, if it can be implemented, and we're making an estimate, but if it can be implemented, the 5-year saving is $35 to $75 million. It's quite significant. That's not counting the core parts. Now, in the cores, we only were able to analyze 12 cores, and it was 1.1 to 1.5 million for those cores for a year. And we are unable to extrapolate because management doesn't have the information because they're not doing it. And we were trying to build the information. And so we're not extrapolating, but we're saying there could be quite a bit of money there. And right now, bus maintenance is tracking some cores. They are taking them out, but they're not being tracked with material management. So there's a huge opportunity to identify all the cores that should be there, and then to start to track them and make sure that we use them in the replacement. And again, we can't be the only bus industry, the only bus service that wouldn't track the cores. There must be others out there.
So I just want to go back to, as I said, so far TTC has already realized 5.8 million annually from better managing the warranty, a new bus warranty. We also noticed actually because they've been telling the manufacturer they fail parts. So in 2016, manufacturer actually did proactive repair for lots of buses, and that work alone worth 8 million in 2016. So from better managing the warranty, the new bus vehicle warranty, they already realized 13.8 million within 1 year in 2016. So I'm going back to a little bit on the alternate sourcing. So we understand for some parts, TTC has to buy it from the OEM. But there are many parts they can go for alternate sourcing. And this is graph just to show you that in the past they did realize this is feasible, and every time they did it, they realized 20% saving. The aftermarket parts warranty, as I said, that they are not really fully realizing the aftermarket parts. So you probably wonder, this seems to be so basic. When you buy a part, it comes with warranty, you should claim it. And the reason why they haven't been doing it is because not a single department had assumed the responsibility of claiming aftermarket parts warranty. So this is a picture of like an engine, but also illustrate a core is what we said is a defective part that can be rebuilt to new standards. So they can be used for internal or external rebuild. TTC does have an internal rebuild function. Or even if you buy a new part, buy a complete new part, you can take that old core back for buy exchange, so you can reduce the waive the core charge. And I said a core can account for 25 up to almost like 75% of the value of a new part. So as the Auditor General earlier mentioned, so we're not saying they are not, they are throwing away all the core. Some core, they are, if you see it, there's like we analyzed the BAE. BAE is the hybrid bus part and air dryer. They are retrieving it from the garages. So I want to show you this picture, next one. So this is the air dryer. This is one of the core we saw. So you see the yellow tag there? This is when the mechanic took that part out of the vehicle, they're supposed to tag it. And most of the time, they did tag it. They show what it is. But then it's the handover to material management. Someone need to make sure to retrieve this and then enter this into the inventory system, so that when the buyer, the TTC buyer, when they need to buy a new core air dryer, they don't need to, they know there's some old cord exists lying around, so they can use it. They can use it for buy exchange, or they can return it. But it's the handover that they didn't put it into the inventory system, so the buyer wouldn't know these cords are lying around. So we have, during our audit period, we've seen boxes of these lying around in TTC warehouses. And also this box was actually sitting outside for the entire winter period, just exposed to harsh weather. So I want to go through, as I mentioned before, we analyzed 8 parts and we come up with 1 to 1.5 million annual saving, just because if you lose 10 to 20%. There are currently over 2,000 codes in the system, and they haven't been fully utilized. And therefore, that's why we say there could be much, much more than 1.5 million of saving out there. And on top of that, there could be more codes they will identify that is worth retrieving.
Just a point, in our prior audit of inventory that came, I think it was last June, or May, June, to this committee, we did identify cores we didn't have as an issue and tracking. We didn't actually have the cost savings, the potential savings. So in the past year, we're being more detailed to show the potential for savings, but I don't know what's been done. And we're not suggesting track a core of $2.99. What we're looking at is to identify the high-priced items and make sure that we're getting the value out of those.
So we're moving on to the second session of our findings. So there's a series of parts shortage issue in TTC. In March 2017, when we examined the inventory record, we noticed about 10% of the stock were completely depleted. Management also advised us that about the demand outstripped supply for 41% of the inventory items. So part shortage, obviously, it will result in vehicle out of service. But it will also result in many other problems, such as delaying TTC's vehicle rebuild. You don't have part, they cannot rebuild. TTC then has to rely more on emergency buy, which can be more costly and inefficient, or lengthy management with request turnaround time. So vehicle hour surface, during the second half of 2016, we know that we look at the average vehicle hour surface because of part shortage. And there are about, on average, 34 vehicles every day hour surface because of part shortage. Now, give you the whole picture, the 34 vehicles only represent about 1.5% of the TTC's revenue vehicles. So 1.5%, you think is not such a big deal, but 1.5% of TTC's revenue vehicle is 68 million of assets sitting there not performing. And we did talk to a number of senior management, even maintenance senior management staff. They said, we can have vehicle hour surface because of preventive maintenance, because of repair, but we should have almost zero vehicle hour surface because of part shortage, because we cannot get the parts in. And part shortage is also partly one of the reasons for last summer's the hot car, like subway car issues.
And I have to say at this juncture that, and this, Ted, you're bringing this on new, so you're going to be moving forward, but the information that I saw around some of the internal reporting around vehicles out of service and trying to identify which ones were due to parts, which ones were due to material and inventory requests, it was deficient. There was some challenges and issues with it. So we had trouble really getting to the number, but I think over time it's worked to 30, on average 34, but it was as high as 50, 60 at one point in time, and it's come down. So that's good. That's good.
Yeah. We do acknowledge, since we've been looking at the number, it seems to the number of vehicles, our surface due to part shortage has come down, but the number fluctuates every day. So you probably wonder, how come we don't have enough parts? So there could be many reasons, and the reason that some of them we identify is there's a lack of control to prevent part request deletion. So the warehouse staff, they can just delete a part request without authorization. If they deleted the request for parts, obviously the part is not going to be delivered to the warehouse. There's a repetitive purchase of the same part, but in very small quantity. So there's always shortages around, and delay in processing inventory requests. And of all of them, we saw most surprises. There's a misalignment in the performance management's performance measure. So I just want to give you an example. So when the user department, maintenance department, when they order a part, what they expect, what they want is a quick material turnaround time. Material requests are something that's already coded in the inventory system. So those stocks should already be on the shelf all the time. Right? So when we analyzed the 2016 data, we saw that almost 20% of them took longer than 10 days and is still outstanding for material requests. Yet when TTC departments, material management, when they give out the performance measure, they report fill rate. Fill rate is something they measure from the time they pick list, from the time they actually gather to take the item off the shelf to the time they deliver to maintenance department. But so they report out their fill rates is between 83 to 90%. Within 1 day, they can deliver 83 to 90% of the material requests within 1 day. But then their fill rates, their performance measure does not capture the period of time from the request coming in to the time they start to pick lists. That whole period of time is not captured in their performance measure. So we think a more meaningful performance measure will be just to measure it from the time you receive the request to the time you fill it. Sorry, going back to Thank you. So in terms of the TTC's procurement policy and procedures, there are many, many issues with the current policy and procedure. I'm not going to go through every one of them. I'm just going to talk about a few important ones. Lack of blanket contract procedures, lack of justification for approval for sole source, and then low response rates to bid. So this, whoops, sorry, I keep going ahead of me. So this table shows you the current procurement methods. Anything less than 5,000, they can use P-card. Anything less than 10,000, TTC have something quite unique. They call it buyer discretion. Buyer discretion means it's up to the buyer to obtain quote or no quote, and they can just go ahead to purchase it. And I highlighted the red here. This is one of the challenge we encounter in our audit is, as we're auditing, they keep changing the policy. So it used to be 10,000, and then they lower it to 4,000 in January 2016, that threshold, and then they raise it back to 10,000 in November 2016. So as we're auditing, it's like a moving target. They were changing the policy at the same time. This graph will show you there's a chronic purchase delay and backlog of outstanding purchase requisitions. At one point, there were 1,900 requisitions that were outstanding. The main issue with the policy and procedure is that it requires buyers to centrally procure everything, even including the very small dollar purchases. So that the buyer then inundated with small purchases, so the workload, and they have high turnover rates, and they didn't have time to really manage well the significant purchases or to explore the alternate suppliers.
I'm just going to add something here, Jane. The people within the purchasing department are working extremely hard. They're overwhelmed with the amount of requests. And the reason for that is because of the changing policies, but also because of just the way they're laid out. For example, on an item purchase of $7,000, the item cost $7,000, 400 quotes were requested and 70 were analyzed. You can't possibly function in that environment. Ted is here, and under the new leadership, I have confidence that it's going to assist with right-sizing the policies, getting clear direction in place, and then it's going to allow them to look at the efficiency around the resources to see what's needed there. But it's not a question of staff not doing their job. It's a staff working hard and being overwhelmed and needing clear direction, and that's why Ted's here.
So thank you, Auditor General. Actually, the example that the Auditor General mentions, that policy is to require buyer to obtain quotes from the entire purchase group, and that's why they have to obtain quote from 400, potential buyers for a purchase of 7,000. They did scrap that policy in 2016, November 2016, after we raised questions about that. So I just want to show about 50, as you see on this graph, about 65% of their purchase order that centrally handled by the buyers are below 5,000. That's why we're saying that they're handling a lot of small dollar purchases inundated by that. For the competitive, the purchase, they need to go through quotes and things. There seems to be a very low response to the bid, to the call, and the number of bids seem to be low. And we try to understand why, and we did a informal vendor survey. We asked many surveys why they didn't bid on TTC's call, and they said some reason is the TTC specification is very complex, and it's really short period of time for them to respond. Also, if they need to look up the call information, TTC right now there's a charge for them to even just to download the document to look at the purchase. So one of the major issues with the current procurement policy and procedure is 40% of TTC's purchase value right now is procured non-competitively, using sole source and single source, 40%. And that is about over like 211 million, over 18-month period. So I just want to draw your attention to that. The city's percentage for sole source is 3%. So we're not saying TTC should be that low. But because we do realize, right, TTC has to buy a lot of proprietary products, so it should be higher, could probably reasonably higher, but the city is 3%, and they now procuring 40% of them is through sole source and single source non-competitively. There's also, we look at 40 sample file of sole source file, 25 of them had no justification for sole source.
And extending this back, part of the reason could possibly be how overwhelmed the staff would have been in those situations, and then to keep the buses on the road. So there's an opportunity here to get things organized and then see where we go from the future, and also to make sure the policies are clear for the buyers. And that was another concern.
So we're moving on to almost the last slide, which is the blanket contract. So in general, we do want people, for repetitive purchase from the same vendor, you should open blanket contract to realize volume discount. So TTC has some existing blanket contract, but when we look at them, we notice a lot of them has extremely low dollar value or low spending. So as low as $800, they have a blanket contract for the purchase, the maximum value of $800. So for those, so on one hand, the existing blanket contract have very low dollar value. On the other hand, they're doing a lot of individual PO purchases, purchase order individually from, it's not through blanket contract. So for 18-month period, TTC procured $174 million worth of goods and services by issuing individual PO to 229 vendors. Each one of them supplied TTC over 50,000 worth of stuff. So on the other hand, for those, they should have opened a blanket contract more, because these purchasers, they are buying it repetitive from the same vendors. So we estimate if they can just move half of the 170 million individual PO to blanket contract. And in blanket contract, usually we realize volume discount saving. Even if there's only 1% to 5% volume discount, a reduction in the pricing, they will realize annually $500,000 to $2.5 million annual saving by issuing more meaningful blanket contracts. So I think 1% to 5% volume discounts is a very conservative. Usually when we buy bulk, we expect a higher percentage of saving. So we just want to quickly recap. So these are the saving opportunities we identified. It ranged from $7 million to $15 million before we account for court. The saving from court is difficult to really pin it down, but we do believe there will be a significant saving. Again, of course, these are our estimates. We have to use some assumption to come up with the estimate, but we took the effort to quantify this saving to show TTC staff that there's significant opportunity out there, and we hope that the staff will take immediate actions on that.
And I'd just like to add one more thing. The estimates are based on the best information available, and the best information was the work put in by the audit team. We are not guaranteeing, but we prepare the estimates, and that's per year up there, to show that it's worth investing in the area. Management can confirm they agree with all the findings. In fact, I had an email from Mr. Byford to say they endorse and they will be actually getting on the findings. And management can't at this point agree that that's the amount, and we don't expect them to do that. But we're saying this is important. We reported on the course last year. It's time now to get moving on it. So I wish to thank the management team. Andy Vince Rodo, actually, he's retiring. He is been on audits along the way. I wish to thank him for his guidance along the way. And of course, the bus maintenance group also. Thank you.
Thank you. I understand we have someone from the TTC, and is there a...
I do. Ted Sloth, yep. And I think you come on the job, Ted, I think it was February, right? February of 2017.
So it's Ted Zlotnick? Yes. Welcome, thank you. And is that Mr. Wong? Rich Wong? Thank you, welcome. If it's helpful, I think we can access the presentation through the clerk system, and we can drive the slides. Yep, someone can just indicate to the clerk when you want to switch the page, we can go. Thank you.
My name is Ted Zlotnick. I'm the new head of materials and procurement for the Toronto Transit Commission. I've been with the commission, this is my 5th month. I'd just like to thank the AG audit team for the work that they did over the course of a year. And I'd like to respond to the findings in this presentation. If you could flip to the next slide. So overall, the TTC does agree with the findings outlined in the report. And since I've started with the TTC, my team, in collaboration with my stakeholders such as Rich Wong and Bus Maintenance and our rail divisions, have started to implement some solutions to some of the issues addressed by the AG. At the same time, I want to ensure that, being the person required to deliver on these savings, that we properly quantify the amount that we can save. As you saw, the savings were estimated between $7 and $15 million. If you take $15 million divided by the annual purchases of $300 million, that's 5%. We believe that we can maybe get to 3% to 5% in that range, but I just want to put that in context. If we can flip to the next slide. We do agree with the 19 recommendations outlined in the report, and we have taken steps, as I mentioned, to implement the necessary processes to realize the savings. Materials and procurement, my division, needs to work in collaboration with our rail, car, bus maintenance groups in order to achieve the savings outlined by the AG. Next slide, please. For example, we looked through the different transit organizations' policies and procedures to ensure that we can align with some of their best practices in implementing policy changes. For example, when I started, I did find that a lot of our teams were spending time negotiating $10, $20, $50, $100 purchases, getting quotes, and this was not value-added time. We've changed that. It costs $250 in cost to implement a quotation process for a $5 part, which made no sense. So we've allowed our team, our field, to actually use a purchasing card to buy things under $250, reducing the need for multiple quotations. They still will try to get a quote, but there's no return on the investment for those small dollar purchases in getting multiple quotations. We've also introduced blanket orders. I had at the last board meeting a $10 million blanket order forecast approved by our board for Ford parts. We shopped through a competitive bid process, many Ford dealers to come up with a $10 million first major blanket order this year to ensure that we leverage our TTC spend to get the best discounts and also remove a lot of the volume out of the department. As mentioned, the buyer's turnover has been significant, and we want to ensure that the buyers are adding value by ordering things in an efficient way. What a blanket order allows us to do is basically the requisitioner places an order, and that order goes straight to the vendor without any major intervention from a buyer, which relieves a lot of the volume in the department. And at the same time, we're going to get a better discount on a $10 million overall blanket purchase than we are on individual purchases of, I don't know, $500,000 to $1 million in incremental time frames. If we go to the next slide, using the AG auditor's comments of building the information and extrapolating, that's exactly what I'm doing now in terms of estimating the potential savings from 4 of the findings identified here today, which are the aftermarket parts warranty, the tracking of cores, alternative parts sourcing. Not mentioned today, but also part of the AG audit was a reduction of our spare ratios, which have significant savings. At this point in time, I'm working on estimating the savings in the report, but I have not conclusively come to the same potential savings as the AG yet. I'm applying the 80-20 rule in order to tackle this challenge. I'm looking at the highest dollar value purchases we make, the highest dollar value usage of parts, and then I'm going to apply a program where I can say that based on these parts and a potential purchase price savings of 20%, which we agree with the AG, an aftermarket part will be 20% cheaper, to start to implement the program. I don't want to spend time on a 65-cent pin that's under warranty that maybe we could return in terms of an aftermarket part warranty. I want to focus on the high dollar value parts first and work my way down the list to the lesser dollar value parts. As mentioned by the AG, there's a lot of intricacies in looking at all these 4 items. With aftermarket part warranties, a lot of the studies show that parts don't fail in the first to 3 years of a warranty period. Manufacturers offer you a 1 to 3 year warranty because they know that the parts have a low failure rate in that period of time. And so to say that we could save a lot of money in focusing on an aftermarket part warranty for parts that may or may not fail in that warranty period may not be something we can conclude at this time. So I am applying the approach again, looking at the high dollar value items, looking at the failure rates to see what can fail within and outside of a warranty period to determine the potential savings, and applying the same to tracking of cores and alternative parts sourcing, reduction of parts ratios. If we can flip to the next slide. So as mentioned, without further analysis on part failure rates, how many things fail within the warranty period, we cannot conclusively say yet that there's a significant savings in implementing the program. Also, we need to ensure that we have resources identified to look at on aftermarket warranty the potential savings by putting an FTE or a full-time resource on just warranty claims. We'll flip to the next slide. The other thing on aftermarket parts, well, not the other thing, but in terms of an alternate part sourcing solution, we need to ensure, and I have my bus maintenance guy who's now part of the subway maintenance team, here to talk about the potential of failure in aftermarket parts versus OEM parts. I think an analogy of your family go on vacation and you've put in a radiator that's not the original equipment manufacturer's radiator, and the radiator fails, you've inconvenienced your family on the vacation. When you do the same with a bus with 60 people needing to get to work in the morning, there's a higher impact on those workers. So we need to ensure that, yes, we could save 20% in the purchase price of the parts, but they truly will be tested and work on the bus or the streetcar before we conclude that we're going to now replace that alternate part with the OEM part. We also need to ensure that we have resources attached to savings in terms of implementing the program as well. Next slide, please. In terms of cores, that's the fourth item that we're focusing on. I've met with our IT division, and we are going to do a better job at tracking cores. There was a sample set of 8 to 12 cores that were looked at, and we want to ensure that we don't extrapolate the savings to say there's millions to save without looking at exactly which cores are the highest dollar value, as I mentioned, and which ones we could maybe start with in terms of better tracking. Definitely, we need to do better tracking of cores, and then estimate where we can save the most money to implement the resources and dedicate those to those high dollar value purchases where cores can be retrieved and reused. Start with the highest and work our way down the list. To conclude, these parts are reusable. As I mentioned, the extra labor costs weren't deducted in terms of the savings in this report. You can go to the next slide. I think it's also important to put things in perspective. The $68 million in idle assets that were highlighted in the report based on our base of all of our vehicles represented 1.5%. But since the since the AG report and audit, we're actually now down to about 10 to 12 buses out of service due to lack of parts. So there's a significant improvement since the AG report and audit. So that 68 million, which is 1.5% of our total fee, maybe 0.5 to 1%, or less than 0.5%. We have to put that into perspective. I didn't touch, the AG didn't present today spare ratios, but we did do an analysis to show they're in line with peer agencies of similar size, and there is a correlation between the spare ratio and the asset reliability, which translates into quality of service. TTC's current spare ratios are in place, are providing adequate balance between the service and the maintenance requirement and quality of service. Next slide, please. As I mentioned, buses out of service for parts problems has greatly improved. There was 2 clear issues associated with that, hybrid parts and onboard controllers that contributed to a lot of these buses idle out of service, and that was related to the stop announcement system. That has been corrected and fixed. A new contract with BAE, one of our key vendors, was signed, and an internal, which that vendor supplied new controllers, and an internal IT solution for fixing the old controllers was found. Next slide, please. So that concludes my presentation. Just one other additional point. You know, we have changed our policies for low dollar value purchases, as I mentioned, and that has significantly taken out approximately 10 to 20,000 need to get 10 to 20,000 quotations for purchases under 10K. So we are addressing the small dollar value purchase issues. If we could flip down a little, just next slide. Keep going, thanks. Rich, I don't know if you want to speak to the spare ratios, but this just talks to the difference between the service level and the spare ratio.
So I wasn't going to speak to any of the presentation, but in terms of the spare ratio, I think we have a good ratio there between balancing maintenance requirements, service requirements, and quality of service. A lot of the improvements to the reliability of bus service anyways came out of some of the recommendations that the AG made in the first 2 phases of TTC's audit recommendation. As the Auditor General mentioned at the beginning of this whole session, is the TTC is in a state of transformation. That means that we're modernizing the system. A lot of the processes and policies in place now are because of some of the recommendations. We are modernizing through new technology, which makes it more transparent between departments to get things going. And basically, through that, we've really found a new balance between what we need in terms of maintenance requirements and reliability of service. So that chart there shows, if you look at the dates at the very bottom, it goes from 2014 to 2017. And I think that's when the time the AG came in, made some recommendations. We took those recommendations, made some improvements, and this is the result of it. And the spare ratio, I think, is now at a good state where we can say we are in line with other industry agencies in the industry, and we're getting value for the money there. So
That's the next slide shows the relationship there, right? Some of the other agencies. So I want to thank the Audit Committee for allowing me to present my response to the AG audit, and thank you to the audit team, the AG audit team, who worked very hard over the course of a year to put together these findings. I believe it'll help me as the new guy on the block as a roadmap moving forward to implement some of these findings to improve both the amount of money that we can save at the TTC, both through cost avoidance, cost savings, and also ensure that we can provide a reliable service to the customers that use our rail and bus services. So thank you very much.
If I may ask the auditor to add?
Excuse me, I'd like to provide just a point of clarity. One of the studies you referred to in your presentation related to most aftermarket parts don't fail and within the 3-year time frame. We actually took that into account, and we went to the heavy manufacturers, and they too agree that most don't fail. Only 2 to 3% fail. So we took 2 to 3%, then took 80% or 70% of that, and then said if you just track those aftermarket part warranties, it was their estimate of the warranty. This is what the savings would be. We're not basing it on 98% or whatever. It's 2 to 3% and a fraction of that. So I just wanted to be clear on that. Thank you.
Thank you to the AG's office, Jane, for your presentation, and to Ted and Rich for coming to speak to us. With that, I'll ask if there are members of the committee that have questions on this. You can please indicate. Councillor Ford.
Thank you, Mr. Chair, and thank you to the Auditor General for the report and to the TTC for your presentation. So this report is being received for information, so we aren't directing anything. The recommendations from the Auditor General's report, were they adopted by the TTC?
Yes, they were adopted in whole, for sure.
In its entirety?
Yes.
So my question to the TTC, and I know you were kind of explaining it as you were going, multiple parts, but so you've actually presented quite a difference between the Auditor General's report and the TTC's takeaway of, and you summarized it in your introductory remarks, of a 5% savings, and you said you'd be looking more at 3, which is just above half. Where's the disconnect between your findings and the Auditor General's report?
Well, thank you for that question, and to the chair, to your question. I think that, as mentioned, we need to ensure that we build a proper analysis of potential savings. So, as the Auditor General has pointed out, some of the savings, let's say in the core, better tracking a core, could be up to a certain amount. They did a sample set of 12 cores. So to say that we could save the full 15 million at this point, I think the Auditor General would agree that further work needs to be done to estimate those savings. So they could be 5% or they could be 3%. We don't know at this time until I would prefer, as the new guy on the block, to undercommit and over-deliver. So I want to do a proper analysis to see where in that range it could be. It could be the full 5%.
Right. Okay, so you're just saying that that'd be a range?
Yes, exactly.
Okay. So aftermarket warranty, during the Auditor General's presentation, it was said that on few circumstances that they have, I guess, used the warranty. Is that correct?
Yeah, they've, in few circumstances, for the aftermarket parts, they actually tested to see if a part would be an equivalent part. And when they did that, what they realized was a 20% saving on the part. So TTC has done some of that testing. What we're saying is expand that. Look to other organizations that actually do that, and then see if you can expand that broader.
And no, it was stated in your presentation that no department within the TTC oversees the aftermarket warranties. Is that correct?
At this point in time, yes, that's what's happening here. Mr. Wong is actually looking at the current bus warranty system, and so we're saying that can be leveraged and expanded to aftermarket parts.
Right.
If I may, it's, so right now we have a warranty program which deals primarily with the new vehicle delivery, because you get your biggest bang for your buck on the new stuff. It hasn't filtered down to the smaller components and the aftermarket components, so that's where we need to probably focus our efforts on next.
But there's already, I guess, a policy in place or precedent setting with the newer vehicles that could be implemented to that?
Yeah, it's basically, there is a system in place, and all we have to do is, mirror that for the aftermarket parts.
Right. Okay. So, and I'm just curious, I was not a member of council when the last Auditor General's report came forward, but in 2014, the bus maintenance audit. I am curious to know, I assume you crossed that in your current investigation and report. How has that been going and implemented from that time?
Thank you for your question. Mr. Wong is here, and I'd like to congratulate him and his team. They have taken on board the recommendations. They didn't study to quantify. They took it on board. They took it, they put the resources in place. They started getting the warranties, and they've realized more than we estimated. That's kind of the spirit with which we were hoping that these recommendations would be implemented, because in these recommendations, they do already know it's important to track warranties. In the cores, we made a note last June, and now, we're still studying, and I think it's important to move along. So on the bus warranty, and in fact, I can say TTC sometimes takes some time to implement recommendations because it is a system change, but they take it seriously and they do it, and that's a credit to Mr. Byford and their team.
If I may just...
Stop you right there for one.
Okay.
Sorry, if I may just add a little bit detail. So going back to 2014, at that time when we did the bus maintenance audit, we estimate at that time the saving will be between 4 million and 5 million conservatively. To date, the bus maintenance department, they have implemented almost 75%. Only, still 25% to go. They have already realized 5.8 million. And so our estimates tend to be conservative. This is the principle we always been using. Thank you.
So let me stop you there to keep order. I'm happy to take a request for a second round of questions. Are there other members of council that wish to ask a question on this? Okay, I'll go with a couple, and then we'll do a second round, if that's all right. I guess that to follow on the discussion that we just had right here, I'll set my timer. Why are we waiting? Why are we thinking, why don't we just get moving on some changes, presumably there are some savings to be achieved. Now, I understand you want to quantify what the savings could be, and that's important for reporting out in the future, but are we being held back with concern over value? Why don't we just move?
Thank you for that question. We're not being held back at all. It's just the approach of where we start. I want to make sure it's not taking a long time to get reports showing what the highest dollar value. I already have those reports, highest dollar value items we purchase. So I just want to ensure we start with those items to implement the strategies. We're not holding up anything. We're moving forward with all 19 recommendations. I just want to make sure that we focus on the largest return on our investment, which is the highest dollar value items, and that's where we're at.
So by investment, what do you mean by that? Are you putting money into the process, or are you changing, like, what is it that you have to put in to get more out?
No, I'm not we're not investing a lot in terms of resources. We're using existing resources. It's just that the report will show, for example, if an engine's $1,000, $2,000, $10,000, we're going to work on looking at what we can do with the cores for engines first versus the smaller dollar value items. So we're starting with, and then we're looking at the extended price of it. So we may have an item that's $500, but we buy 3,000 of them, so it's a high dollar value purchase over the course of a year. So I want to make sure my resources are focused on those items where we get the biggest return on our investment first. I have the report, and that's just, the only difference is the approach. I just want to make sure we're focused on the biggest return first.
In reading the report, I've struggled with this notion of core charges. Am I right? Like, the core charge is a deposit on a part.
Well, the core, when it comes to an engine, so the engine comes back and it's defective for whatever reason. Instead of buying a net new engine,
right,
we would return the old engine for refurbishment, and that would come back. And so the cost to refurbish that defective engine is much less than purchasing a brand new engine. So the more of the old engines that we can return, refurbish the cores, the more money we save. And we can refurbish cores multiple times, so.
But is it like a beer bottle? Like you buy the case of beer, you pay the 10 cents per bottle, you consume the product, and that bottle gets sent back to be washed and reused. It's kind of like a core charge.
Mm-hmm.
So why aren't we returning everything? Presumably the core charge is higher than the scrap value of the part. So even a $2 part, why wouldn't we collect a box of those, keep a tab on what we've got, and then return them? I'm just puzzled. There's 2,000 parts. It's money.
I agree. And the challenge we have is some of these parts are not returnable. So some of the cores, I've taken a tour of our warehouse operations, and I've seen some of these parts in bins that are defective. So the determination of whether the part can be returned and refurbished is part of the process. And that's where we have been lacking some resource to do the assessment. So once we can get the resource dedicated to do more and better assessments, we can return more of those cores, and that's where we're working right now.
So
I might just clarify for you, it might help you with your understanding. So it's a situation where you have a part, and it's not like you can return all the bottles and get a deposit back. It's when you need a new one, then you carry it in and they get a reduced price.
Right.
So you can't just take the box in and get the money back. So you're going to have the need. So the more that you need, the more cores you're going to have, but the more you can return when you need the next one.
of course. Presumably, some of these cores are exiting the system right now as scrap, I think is what I understand, because we haven't managed all of them, and maybe some of the lower value ones. Is it conceivable that somebody else, perhaps the purchaser of the scrap material, is then realizing the value of those cores rather than just realizing the value of the scrap? Like, are we losing somewhere in the process because we have missed this step?
Yeah, I don't believe so. I mean, when our teams they're experts in the core, in the technical specifications of these parts. I honestly believe when they assess the fact that this part is not refurbishable and scrap, it needs to be sent to scrap, that their subject matter expertise in that area is such that, no, nobody would. And I don't know, Rich, if you want to speak to that, but I don't believe that would be the case.
Most of the smaller items there, like take an alternator, for example, it's really not worth anybody's time or effort to rebuild that, especially they're so cheap now. In particular, the bus industry, it mirrors the automotive industry. The industry is changing now. A lot of the parts now are non-rebuildable because they're mass-produced, and they're very common with automotive parts. So, and that goes for most of the smaller items. So when it comes to the bigger items, I don't believe anybody would be profiting off of some of these things.
Thank you. If it's the desire of the committee, we can do a second round. Councillor Ford?
Thank you. My last question is, what's the implementation timeline on the recommendations? And will you be reporting back to the TTC?
Yes, I would like to report back to our TTC board by the end of the year. Not on, and you know, as I mentioned, I want to undercommit and overdeliver. I want to make sure that at the end of the year, I can provide them a report of where we're at in implementing the findings. We may not be able to implement the findings at 100% level, but I want to show them progress towards the implementation, my approach, what we've achieved, what controls and processes we've put in place in order to realize the savings identified in the findings.
I'm going to also ask one more. I think it's to the auditor. I recognize there are two kind of buckets of recommendations in here. A lot of them are process-oriented around procurement and material supply. Purchase cards, thresholds, getting quotes, that type of thing. The other, to me, struck me as a little bit more specialized or industry-specific and are a little more related to supply chain logistics and parts. In your development of the audit file, are there industry experts out there? Are we industry experts in-house? Is there potential to get help with this very specialized nuance of supply chain management?
I'm going to start, and then I'm probably going to turn it over to Rich Wong, because you may know additional information. So in relation to purchasing procurement, and I think that, first of all, both sides of the house is a big job. It's a big job to undertake. But purchasing procurement is more straightforward. On the parts, you're getting into technical aspects. You're getting into testing of aftermarket parts to make sure that they are equally safe. You're getting into extent of core retrieval and the usage of those. There are firms out there in the U.S. Also, there are companies like Orion, as I mentioned. Now they sold their aftermarket parts section to New Flyer. There's resources out there because it is a specialized area. There's some resources out there, and I think that there's an opportunity for TTC to leverage it. I think that they're specialized enough that I don't know that, Ted, you could get in to figure out it all, and I don't know if you have a sufficient team to do that, but, you know, Rich, you're more familiar with the parts and what's needed there, so if you want to comment on whether there's expertise out there to assist.
So there are expertise, you know, the biggest resources are pair agencies. So we communicate a lot with New York Transit, you know, other agencies like Boston and York Region. So that's our biggest resource for expertise. And to the Auditor General's point, there are other companies or consultants out there that also do this type of work, and they can come in and take a look at some of the processes and specifications that we have for alternative part sourcing. So there are a lot of people that can do this. We do have an in-house staff that do it right now, but moving towards more of the aftermarket parts, with so many parts out there, we don't have enough resources in-house to do it. So, you know, we can supplement it without outsourcing it.
Okay, thank you. Thank you. With that, are there speakers to this item? Okay. I do have a small motion. Put my timer on. So it is a request that the TTC consider hiring an external consultant without me going too far into their business, and I recognize that they're in the process of figuring this out right now, but I don't think a consultant in this case is a bad idea if it's something that works. And the second is that we have a report back on this. I understand Mr. Zlotnick is going to report at the end of the year, so I'm hoping that the audit committee can learn in the spring what the findings are of some of these changes. And I'll zoom in on items 1 through 3 and 11, which are essentially the more industrial specific alternate parts sources, core charges, managing the inventory, that sort of thing. In reviewing this report, I know I've simplified it in many ways. I talked about beer bottles, and I'm going to talk about my experience at my mechanic, who's fantastic. Bring the cars in, and he punches it up on the computer and says, your brakes need work right away. But he said the good news is, you're still under warranty. They're an aftermarket set we did 2 years ago. You're at 1.5 years, and that earns you a discount. So he manages his customers, and he keeps files on the cars. And because of that, I save money. Now, it's nowhere near as simple as it would be to implement a very complex thing with a major industrial operation like the TTC, but the concepts are there. And I know for a fact that he will charge me a core charge on a part, and I'm sure that he will reap the core charge refund when he brings it back. He has a business to run. And I think that we should be doing more of that at the TTC. And I recognize it's going to take some time and some investment in it. I would encourage the TTC staff to look at this further. I understand there is some differences of opinion on the value of the potential, but I see millions of dollars here. The other dimension I see is that having a better handle on our parts process also means that there are more vehicles on the road. And it also means that I'm not sweating as much when I'm on the subway and with an air conditioning that doesn't work. And I know that was the headline, but I noticed that. I've been riding the subway for many years, and there has been a lot of the cooling systems out of service as of late, and perhaps this is part of the explanation that on the industrial side of the supply chain, we are having some difficulties. I hope the committee supports my motion, but what I really, really hope is that we will learn in 6 or 8 months that we have found significant savings in our operations, and that we have more parts operating on time. And with that, I guess I'll also move the staff recommendation. So all of those in favor of the motion on the screen and the staff recommendation? Any opposed? That's carried. Okay, it is approaching 12:30. At this point, we are going to break for lunch. We'll be back in 1 hour, 1:30. 1:30. 1:30. Okay, if I can have folks come to order, we are going to resume the meeting, and we are on item AU 9.12, Auditor General's observations of a land acquisition at Finch Avenue West and Arrow Road by the Toronto Parking Authority, Part 2. I want to consider a variation of the order here if it pleases the committee. At the suggestion of the auditor and Toronto Parking Authority, the auditor is willing to do a brief verbal presentation considering the complexity of the report to walk through her key findings, and she would do this in conjunction with the TPA so they could add comments. That may make our question period more efficient. If the committee's in agreement with that, is there anyone that doesn't desire that? I think we'll ask the auditor and TPA to go ahead, and then we will have an opportunity to ask questions.
Thank you, Chair, and thank you, Committee. So I'd like to start out with saying that there has been some difficulty, delay, I guess, in getting this public, and that responsibility rests with me. There was some law in relation to an active land transaction, and I had to make sure that I was absolutely clear, and so I apologize for any inconvenience, and thank you to the clerk's office for assisting me with making sure that this became public. In relation to this transaction, it's not new to TPA, it's not new to the City Council. The transaction related to Arrow Road and the involvement of the EVBIA at Arrow Road has been going on since about 2008, 2010. There was a council motion to support the purchase of the property and potentially to build the flagpole. So it's been going on a long time. But what this transaction relates to is the latest approval and direction by City Council to purchase at fair market value land at Arrow Road. It came from the public realm strategy. It did allow for the build of a gateway. And so we looked at that. And I put a scope paragraph that's been attached to my cover report online. And my scope is in relation to, it doesn't discuss the merits of building a flagpole. It's not what this transaction for me was about. And it's not about board conduct. It's not about whether this land should have been purchased. City Council debated it. They supported it. And so I was looking strictly at, from the direction of the City Council to purchase the land at fair market value, and then whether that was occurring, and if it wasn't, what are the recommendations going forward. I can say, I'm going to welcome Lauren Persico and Marie Casita from the Toronto Parking Authority. Lauren's the president and Marie's the vice president of real estate and development. And we agree with all of the discussion throughout this report, except for one line, and the line is essentially that I didn't feel that TPA would have noticed or come to the same conclusion. It may have been purchased at fair market value. I know they don't have that view, but for the rest of it, we're on the same page, and I'd like to take the opportunity to walk through each of the key findings, just to bring understanding, and I'll ask Marie and Mr. Persico to add any commentary that they feel to help to really provide a fulsome picture. This is not an audit where I'm providing audit assurance. It's a review of the transactions, and these are my observations. It's different than an audit, and it has a different layout, and the reason for that layout is because it's more of a story of what happened rather than a process overall look. So let me start. So the key findings, I'm starting actually on page, if you have a look. The findings from part one, and what we noticed from the my first portion was that we did determine that the land, and TPA has agreed, that the offer for purchase was above fair market value. We did notice that the authorization, the board had authorized the purchase at $12.1 million, and we noticed that it was $12.18 million, so they were beyond their authorization in the purchase. Essentially what we noticed was that the purchase price was about 2.63 above what I thought was market value, and then we had we did involve some market players, and it turned out that we were both on the same page, that at the end of the day, that's where we were. So we're going to walk through how we got there. And forgive my voice, I have a little bit of a cold. So the first finding, A1, relates to hiring an independent business valuator. So essentially, when there's two parts to this property, the land value, and then there was a digital sign. And assets have a contributory value when you go to purchase a piece of land. My role was not to determine whether we should have a sign or not have a sign. And there are many pieces of property that when you go to acquire it, it has assets on it, and you have to take the assets as part of the property, and those assets have a value. So my job was to determine, was the process appropriate as we started to look at this asset value. And essentially, in August of 2015, there was a valuation done, actually a land appraisal done, and the land was valued at $7.5 million. And in around December, the purchase price was $12 million. So there was a difference there. And so the difference, in effect, was the sign, could have been the sign, or could have been something else, or could have been a concern maybe the land went up. But essentially, we had to determine the sign. It became a material point. So TPA informed the board in July of 2016 that it was hiring its outdoor sign consultant, its own consultant, to validate the purchase price. It was TPA's consultant, but it was the same person who put the sign on the site originally in 2009. And so the sign consultant was essentially valuing his own sign. And although time had passed, it was important to make sure that, he would have been open and independent to think that maybe the market was still valued the same amount and that kind of thing. So, we wanted to be sure, first of all, that he was qualified. In this instance, he was not he was more like a broker. And I don't want to undervalue, it's an important business, and he's more like a broker. He brings parties together, assesses a site to determine what's the value of signage on the site, and then prepares a proposal to try to get that value for the site and the signage. It's different than an independent appraisal of somebody who is outside the situation saying, maybe the market will only bear a certain amount, and for example, a business valuator. So my first finding relates to, we knew he wasn't a business valuator. We also knew he was involved with the sign. And he himself said his role in this was not to give an independent value of the sign that was there, but to what's the maximum value one could possibly get. And he said there was possibility in his estimation of getting something. But when I put it to him and I said, if you were taking your valuation and giving that money to another party based on your valuation, and he said he wouldn't be cutting a check for the difference because he wasn't that as certain as an independent valuator. So if you're doing your valuation, you need to make sure that you do the due diligence in behind that to come up with a value. So my first finding related to making sure that you hire the independent person and that they're qualified as the business valuator. And if you need to overlay that with different expertise, or they need to do that, to do that. So TPA, I think that you've agreed, and I'll just turn it over to you for that finding.
Yes, thank you very much. We do agree with that. We would also like to add, however, that we had full intentions of getting the sign valued by an independent business valuator and someone who's very knowledgeable in the market with respect to signs. We had executed a conditional agreement of purchase and sale August the 19th, 2016, and we had just begun our due diligence period. We would have continued through that for the next 60 days, and through those findings, arrived at what we believe to be an important or the appropriate independent value for the sign at that.
So where we agree to disagree is that you would have gotten there, so we'll talk about that a little bit later, but we are on the same page with certainly the recommendations go forward and in relation to what occurred here. In the next one, A2, avoiding conflicts and potential conflicts of interest. So a lobbyist was hired to work with the EVBIA. This is the Emery Village Business Improvement Area. And lobbying is something that is important within the city, and they register their meetings. And this lobbyist was hired to seek parties to fund the flagpole project, to create a program for businesses and residents, to get the flagpole to a stage where you're going to be building it, an RFP. That was the role, the flagpole in the square, of the lobbyist. And he has been working for the EVBIA since 2008, and he is under a monthly retainer of about $12,000 a month to help to build this flagpole. And there has been a lot of reiterations and work that has gone into trying to bring parties together, to try to buy the land before, to try to lease the land, and there's a lot of history behind that, and I didn't go into it in my report. But essentially, he's been working monthly, meeting with different people to try to move forward this project. Now, he became involved, and it's been a little bit unclear for me, and that's been part of my challenge to get to conclusive findings, but he has been involved with bringing the parties together, and his role was to get it done for the BIA. And that's part of what you had said, Lauren, when you were getting it done. And he became involved. He brought the parties together, and I believe he was in the room working with the negotiation team, I think, and he brought you the price, Marie, I think.
Yes. Initially, when we first started the negotiations with respect to the property, he was in the room. And at one point in time later on, he did indicate that he thought the vendor would accept this particular price.
So, yeah, so from there...
Just wanted to, can I add something to that? So in July we met the lobbyists, or not the lobbyists, but we met on site in July of 2015 with a couple of our board members and a representative from the BIA and the EB and the consultant, not the person who negotiated, but someone from their company. And so that's the first time we talked about the site. The time before that was in 2010, very early, when we were asked by City Council to partner with ask the EBIA to look at partnering opportunities with TPA.
Yes,
So
and
that's the history of the
And I think those partner opportunities were even as part of 2010 council. And when I refer to the sign consultant or the lobbyist, it's them or their company. It's not necessarily the person. Right. Okay? So anyway, so he brought you together. He was involved with early negotiations, but at some point in time, you conveyed that he wasn't involved with the negotiating per se. But what I noticed was that he was copied on various versions of the agreement of purchase and sale throughout the process. And he reported out to the EVBIA that, he knew that in May that TPA was moving for this purchase to happen. And his billings show ongoing discussions with the vendor and the TPA and what he reported to the EVBIA. So what would happen would be he would come back and report to the EVBIA his report on what he had done. And his report said he was involved with facilitating partnership, actively engaged over the past many months with facilitating partnership discussions with TPA and the vendor. And the discussions have been difficult, but they've been extremely positive and they've moved forward. And so he's been involved. And so I found it hard to determine the extent of involvement in the negotiations, but I've seen enough to feel that it was probably closer than I'm comfortable with, as far as it's not a normal approach to.
So in terms of that, the reason the lobbyist was involved, he was initially involved in the purchase or negotiations in 2010 and knew the landlord or knew the owner of the property very well through the previous negotiations. And so we've thought, he represents the BIA. We're both working to make this happen. And so he did help set us up with meetings with the vendor. And he was circulated because he had the relationship with the vendor. And he was involved also because initially the vendor was going to be the developer of the Gateway project. Mm-hmm. And that was really the lobbyist's involvement, because that's what he was engaged by the BIA for. So that was a real thing. Now, once we weren't comfortable with him being the developer by June of 2016, and we said either we'll pay the 12 million 100 or 180 eventually, or we're not doing this deal.
Right, so and that's the way that I understood it too, where
Right.
he knew the vendor, and the vendor was going to be the developer, and part of his role was to have the development of the flagpole and square. And so he was involved with the transaction, being in the negotiations somewhat from what we could see, and that's what your understanding was, and he brought the parties together. Now, one of the things is that I had asked him, how did he, I had seen first a project note, Marie, Ms. Casita, in your notes to show that the way that the price was arrived at was, there was two market evaluations that were done. The market evaluations independently showed comparables. So a company did your evaluation. Apparently the vendor had his evaluation that you informed me that you saw. And somehow in the project note, it said that they were most it was arrived at by taking the median price. But I was surprised when I asked the lobbyist if he knew how that price was arrived at. And he said, well, it may have been that the landowner had a value of 17 million, and it may have been that TPA had another one, and that this was the median price. And between that I just couldn't understand in the beginning, and this is why it took a little bit of time to get here. But both parties' account of how that happened was relevant.
I think that with respect to the valuation, the vendor did have a valuation at a much higher number. The arithmetic average is approximately the initial purchase price. There was a meeting with Toronto Parking Authority appraisers and the appraisers for the vendors. We were not in attendance at that meeting, but they sat down and they reviewed comparables. And and that meeting occurred. We don't have the results of that meeting, but it was shortly thereafter that it was communicated to me through the lobbyist that the vendor would likely accept a purchase price of $12 million, and we started the negotiations on that basis. It should be remembered, of course, that that did include the development portion of that contract at that.
Okay, so then it was your appraisers who were there making that negotiation. And then it was the lobbyists who called you.
Our appraisers from 2015, as well as the vendors' appraisers.
And you heard from the lobbyist.
I'm sorry?
The lobbyist gave you a call and let you know what the vendor was willing to accept.
Somewhat after those meetings,
Yeah.
but I'm not sure what was discussed at those meetings, and I'm not sure the outcome of the analysis of the market comparables.
Right, you said you simply received a call from him, but you weren't sure. You received a call from him, the lobbyist telling you that the price was $12 million. That's what you said. So I just want to make sure I'm clear on that. So then what happened was, once the development agreement, around May, the development agreement was still live, and it was approved to the board, but around June or so, you became uncomfortable with the development agreement. Do you want to elaborate?
Yeah, the development agreement meant that we'd be kind of sole sourcing the development, and but he was making it originally a condition of the deal. And we saw language, apparently it was very similar language to what was proposed in 2010 when the developer was going to build the pole at that time. And they had done a lot of work previously regarding this flagpole project. But when we saw the language of the agreement, and we've gone through this, we were not comfortable with his requirements, and we said, we're not doing the deal. Like, we have to do it through normal means, RFP, so forth. We're not doing sole sourcing. So we said, either you sell the property at the purchase price, at the price we say, or we move on. And again, once again, I say conditional. It was a conditional deal. We had to do our due diligence.
So the development agreement went away, and at that point in time, there was some, I guess, suggestion that if we now have to go to RFP to get the flagpole built, that there might be some costs associated with that. And there were some discussions that were happening in relation to getting some funding in place to support the pre-construction surveys and things that had happened.
Right. We got, because, I mean, one of the things that was kind of making us move fairly quickly was Canada 150, because the idea of the EBIA was that this would be a great, development and project for, celebrating Canada 150. So we did the work at that time, and we needed some pre-development funds just in terms of doing consultations and so forth, and we received that from the board of directors of our board in our July meeting, and that was an intention just to move it forward just in terms of investigating possibilities. And we did that, and it was clear to the board that we were going to make an arrangement with the BIA to be refunded for any funds we expend. So we still needed to get that resolved. And although by the time you came on the scene, it stopped. So
Okay,
we really
so
didn't
I
have.
knew the board was aware of $100,000 required for funding, but I don't know if they were aware of the full value of the flagpole. But I do know that there were discussions between you and the lobbyist in relation to the funding, but and the BIA, I believe, yeah, you're saying, but it related to how you're going to recover funds. In other words, there's always the discussion around potentially funding something like this, and I think TPA has done something like that in the past, and so the discussions happened, and it was about how you're going to repay it. I just want to...
Yeah, in terms of the, if we were to be involved in the development itself, we would have to be repaid. And in the past, we partnered with BIAs. We actually did it in Councillor Matlow's ward with the Spadina-Thelma BIA, the Spadina Village, where we shared costs on a project and we actually pre-funded it. So not uncommon. We also did this in Corso Italia area where we built a garage, and we did it through what's called benefiting assessment, and it's tax on the local businesses. So these were all options that we would probably have brought forward to the EBIA if we had further discussion.
Or to the board. I think-
And to the board, because the board did not approve the funding of the board.
Exactly, the board didn't. I think one of the challenges I've noticed throughout this, and it's actually a lesson for many boards, so some of the lessons learned in this file are actually important for other boards. And one of those things is about sharing information so that, like the full board wasn't aware of the lobbyists' involvement as the agreement proceeded. And that might have been important to look for potential for conflicts or just to understand the transaction more. And that was one of the areas where some people knew more than others. And it happened during the file in other areas too. So going forward, having more clear information, transparent information, and making sure that they're aware of what's happening to the same degree. You had some people taking tours and some people not, and it was important to make sure everybody had the same information.
And we agree with that. It wasn't intentional to do that, and the board, we do have a real estate committee where people are aware of this transaction for the whole year, and it does get distributed, but I agree with you. Everybody should get equal information, and we will endeavor, we agree with your recommendations about, confidentiality agreements if there's conflicts of interest. These are things, as I said, when you did this report, there are a lot of things here that are very helpful in terms of how we can go forward. And I thanked you for that. So.
Thank you. Now, the next one, and this is still around conflicts, but I was surprised to learn on 2 occasions that the lobbyist was aware of some information that was in camera at the TPA meeting. I note that in the June 2016, his report to the board, to the EVBIA, he was reporting out that TPA had presented an offer to the vendor that was acceptable to the vendor. The purchase was due to close, and this is information that came from a TPA board meeting. From what I can see, but he was commenting specifically on, at its meeting on May 25th, 2016, TPA authorized staff to present an offer to the vendor. And normally, and this is why I had such challenge with my report, normally this information is in camera, and then you have to seek legal advice if you need to release it. And so I noticed that, but the other thing I noticed was in the billings of the lobbyist, I noticed that he was monitoring and the October billing, October 3rd in September, he would have been monitoring the TPA meeting. And I was the person reporting out on this transaction at the September meeting. And when I spoke to him, he had mentioned to me, and it's in the quote 111, he thought it was an error. But when I saw 2 transactions related to in-camera meetings, I left it in there. Maybe, in fact, it was an error in billing. But I was concerned, and I just thought that's something that was to take note of. So worried about conflicts from that perspective.
I'll take note on that. In terms of in the in-camera stuff, I have no idea how he reported that. I know he had knowledge of the agreement, and where you come into, where I really understood what you told me, signing confidentiality agreements, that information, even if he's involved with the negotiation, shouldn't be divulged even to the business association. So in that way, I agree with you. No idea about the in-camera, because in-camera is supposed to be in-camera.
Yeah. And then there's just a quick note to just move along. He had provided you advice in relation to media questions related to, we think it was relating to council's approval, excuse my voice, council's approval of this transaction to proceed with it. And so
it was actually in terms of the March approval for TPA to pay fair market value. So those were shortly there, I think, and I don't remember the conversation, but if we're talking about media, is how would the BIA and Toronto Parking Authority respond in terms of, funding things? Because we hadn't resolved a lot, things yet. We have to get the property before we resolve our dealings with the BIA.
Great. Now, moving ahead with the sign consultant and the lobbyist. So we have the sign consultant performing the valuation on the sign to purchase the property, and the lobbyist is also the lobbyist not only for the EVBIA but also for the sign consultant. So that's when I stopped, and as you walk through a transaction like this, you don't start with a process, you start with each thread, and you have to follow each one down. And I had to do a lot of work to see if I could determine if the sign consultant was influenced by the lobbyist in doing his valuation. And I found no evidence of that, but the conflict is still there. So the lobbyist represents a sign consultant in over 200 interactions since 2011. There's quite a lot. There's no problem with the lobbyist representing a sign consultant. There's nothing there. But when we're looking at the conflicts, if the person who put the sign on the property is also valuing it, and the lobbyist who's working to negotiate the agreement is also the lobbyist for that person, I had to make sure, and it's through the discussions with the sign consultant that I got a level of comfort around what was behind his valuation. So we'll talk about that in a little bit. But TPA, you do agree with the recommendations around lessons learned going forward with respect to confidentiality agreements, also involving somebody to this degree, looking for conflicts of interest, making sure it's clear, that kind of thing.
Yes, I agree with that. And although, we've dealt with the EBIA and their lobbyists before and know the person and, trusted the person, and our sign consultant on the other side, worked with us since 2008. On our own outdoor advertising, we felt comfortable, right? So I trusted them. But it's better to get, as you said, with any new person who comes forward, get a confidentiality agreement if there's conflicts, find out what those conflicts are and report it at least at your board meeting to say, these are the parties that were involved.
Here's the role, absolutely. So then the conflict with the sign consultant, I think the challenge there was because of this long-standing relationship. What happened was that there was no engagement letter, there was no clarity around the terms of how he was going to value it, the level of reliance, there was no payment, there was no contract, there was no invoice. So my natural questions were, how is he getting paid? Why is he doing this? And, he conveyed that because you were a long-standing client, he was doing a service for you, and he never imagined that it was going to be relied on to this degree, and I think that you agreed with that, Marie, in one of the conversations we had, or that it was going to become this complex, and so, and he was trying to, and I'll get into it later, but maximize the value because you wanted to understand the maximum value. It wasn't, he communicated, it wasn't coming from the lobbyist. You wanted to understand the maximum value.
Yes, that's correct. And the reason for that, of course, is council did direct us to purchase the property at fair market value, and the definition of fair market value is the highest and best use, being the maximum value that the property would trade at, given a willing buyer and willing seller. Yes. And reasonable exposure to the marketplace. So that was the reason for trying to determine what the maximum value of the signage would be on the property.
Right, but maximum value, I think the challenge for me was, his words were, it was possible, but the likelihood was not something he assessed. It was possible that we might get there, but in reality, it was a big risk because once the assigned value is there, that's what we were going to pay. And so that's where it became challenging, different from a piece of land, the maximum value of, what we get.
Yes, however, real estate deals are often trade on that basis. They trade on expectation, they trade on a proposed zoning, or they trade on a likelihood of getting a certain density. So it's not uncommon to trade based on a probability factor. But the key here is to be able to review the assumptions in great detail to determine and to try and assess that level of risk. So the assigned consultant, I think we've talked about this before, the assigned consultant will identify the various risks, but it's up to us to assess the probability.
So we're talking about the conflict, so I'm going to leave that probability question for a little bit later. I'm just going to keep going with this. And so, anyway, what happened was the sign consultant, after we finished our discussion, looking at, he was involved with it before, he's involved with it now, the lobbyist represented, he did confirm that looking back on it and looking at it now, the optics, he wouldn't have gotten involved, and the optics weren't the greatest. And he didn't receive anything for this. I was concerned that maybe there was the expectation of a potential future deal given he wasn't paid. And I did look for that. I did not see that. But one of the comments was that, you didn't promise him the next contract, but I didn't see that a promise or anything written. So I just left that as it was. Do you want to comment on this? So you agree with the recommendation that even if it's a long-standing relationship, this is a recommendation on page 21, that you would not be approaching it in the same manner next time?
Absolutely. Long-standing relationship or new, we absolutely agree with the fact that we should check for conflicts and have confidentiality agreements executed.
So the next area is A4, and it starts on page 22, and I'm looking at the involvement with the VP in relation to the sign consultant's valuation. So the sign was an important part. It's about $4 million, a third of the transaction. And what happened here is in preparing the sign valuation, what happened was the sign consultant and you, Ms. Casita, you met together in mid-July, and there was an analysis of the market, and the direction for the sign consultant was, how can we maximize value on the property as a sales broker looking forward? And he had informed you that there was, at least this is what you've conveyed, and he said, that Ministry of Transport was looking at third-party signs, and that there might be the opportunity, the possibility that there might be allowing a third-party sign there. And the notes that we saw were 25% chance that they might allow it. So what happened was on July 27th, there was a valuation prepared of a current sign and then the proposed sign. And the proposed sign was a sign that didn't exist, 25% chance, so the value was discounted by 75%.
I believe there's a correction. At that point in time, we thought there was a high degree of probability that the sign would be allowed. That was conveyed by the sign consultant. We applied a 75% discount factor to be conservative. But the notes in the information that we had obtained from the sign consultant was quite positive at that time. This is the fourth week in July.
Yeah, I'm just conveying on the notes, and I'll have to go back to look at the detail. I understood it differently.
So I just wanted what happened is we thought when we were in July or June or before we signed the deal that there was a strong probability by our consultant that you could get a digital sign near relocated or a new sign on the highway, although it was prohibitive, because there was discussions at the province. So that's what we had indication. When we signed the deal, shortly thereafter, the consultant said, it's likely not going to happen. And that's when we changed, obviously, valuation approach, or he changed his valuation approach.
So I was looking at the notes, and I'm just saying that it conveyed 25%. That's what the analysis was based on. But in any case, the Ministry of Transportation and city officials, but the Ministry of Transportation said that it was a stretch and, unlikely, very premature to think that it would even apply to third-party digital signs. And I understand that's different than what you recall, but that's the information we have. In any case, an analysis was prepared, and the analysis was based on these assumptions, and the assumptions were agreed to by you and the sign consultant, right? And the assumptions were, the calculations were completed by you based on the assumptions that were discussed.
The calculations were completed by me based on assumptions that were prepared and developed by the sign consultant.
Okay, and that process, he explained to me, and I think you have, it's a mathematical process. Once the probability and assumptions are known, you prepare the net present value of the income stream for the current sign that was there, and then the potential, a 25% potential that a second sign would be added.
That's correct.
Okay. And then from there, he put on you sent it to him, there were some adjustments, add in prepaid rent, there's some adjustments to the spreadsheets. But then he put his cover memo on and submitted it as his final version. And then it was just that day, on September 1st, I received a call from Councillor Filion just to look into this transaction, because he wasn't sure that the price was supportable. So I came to see you, and we finished our meeting around 12:30, and Marie, you were on the phone because you were on vacation at that time. Anyway, after that, the evaluation approach changed. Within 24 hours, it changed to a new methodology, which was the multiples approach. And I don't know that was coincidental. I know that you said at that point in time you came back to the table with the sign consultant and wanted to understand if there's another way to maximize the value. Do you want to explain that?
I can address that. In deals, the sign consultant was the broker that handled the Toronto Parking Authority and I think for Exhibition Place and other city entities in terms of RFPing to the market. And the concept what he put out there is that a outdoor advertiser would pay an upfront fee and an annual rent. So he was valuing it on that basis, and when we received that, he did do it, and he put in the letter and did it all. However, as we said to you, when we saw the number, because what he promised us in 2008, we thought as an upfront payment, it wasn't as much as we thought he said it was. So when he came up with that number in his appraisal part, his valuation, we weren't comfortable. And I said to Marie, the only way to test if this is right is to maybe ask an outdoor advertiser what they pay for this.
So you both you and I, we phoned an advertiser, and they confirmed the valuation was a lot lower than, than the valuation that was there. Okay, then what happened was when he switched to the multiples approach, he wrote an email that related to, this was a question, that the delta between, the delta of that you were trying to get there, like he said essentially that the delta is about 3.5 million, and if, that the license could get you there. And I guess my question was, why would he be trying to get to a price? And that's, he knew the appraised value, he knew the land value, not the appraised value, the negotiated price of 12 million. He knew the land value, and he thought the delta was the difference, but I just, like, why would he be trying to get to a price? So
Well, I think because he simply knew what the land was under contract for, what the property was under contract for. We certainly were not suggesting in any way that he needed a value to support the 100% of the delta.
Okay, so then the next thing, and we're almost through, that the design consultant put the calculations on his letterhead from the iterations back and forth, but I think that what caused me to raise a question was, there's back and forth with you providing suggestions about adding in information related to his experience, and he hadn't done this kind of work before, I think, or as much. But, or he didn't know it was as formal, that people would be relying on it to the same degree. So anyway, on September 8th, there's two things. One, you had asked him to backdate the report to September 1st. And then the second thing was to include a line saying, I have completed my analysis as at September 1st. And I made note that it wasn't that it was effective September 1st, it was you completed the analysis as at September 1st. And so he hadn't started this multiples approach analysis until September 3rd after I had arrived. So just curious why, and you had explained to the board why the difference in the dates.
Yes, that's correct. And just to summarize, two things. I agree with you that he's certainly wasn't very familiar with doing full detailed valuation reports. But as it relates to the date, oftentimes what we will do, or I will do, is when I'm doing an appraisal, I'm doing a consulting report, it will often be effective as at a date being either the beginning or the end of the month, and it's only because what that really means is that people have taken a look at comparables, or people have taken a look at agreements, or using the multiple approach, various contracts that might be in place prior to that date, which in fact was the case. For the multiple approach for his comps, they were all in place prior to August 31st or September the 1st. I would like to reiterate that it was purely coincidental that the date was picked prior to the date that you started your investigation. They're in no way related.
And then after that, what had happened in July is when you engaged the land appraisers to appraise the land, and they did the real estate appraisers, and they did a great job. They're very reputable, and they did a great job, no doubt. And you had asked them at that time that you had your media sign consultant doing a valuation, and you wanted to include their valuation, attach it to their land real estate valuation, and they agreed to include that valuation. When he did receive it, he did not wish to include it in the document, and I know that you had asked him, said that you were disappointed that he wouldn't include it now because, and you understood that there might be some caveats, but you wanted to have it included and at least add it together. And he was clear that he had just reviewed the document. He concluded it shouldn't be placed on his letterhead, and that by adding them together would infer a total value that he wasn't comfortable accepting. But that's fine. But what caused me concern was that then you wanted to go to your former partner who now worked with that firm to see if he could have the executive VP change his mind to include it?
The reason I did that is because the original scope had discussed the fact that the two valuations would be included. So they would be included as one report, they would be added together, but there would be necessary caveats in place for both, because both the sign valuator and the real estate appraiser have different skills, and they were opining on the values based on their skill set and on the areas of expertise. So I had said, because at this point in time, we're now getting towards the 8th of September, when I had promised to have a report to the board, and I had said there would be one report. So all I wanted to do was try and provide the report in as clear and concise a manner as possible so that the board could do their review. So what ended up happening is I took the numbers and I added the two numbers together so that it would make it easier to do so.
Okay, so we came to the conclusion around October 17th that the value was overvalued by about $2.5 million. We provided that to you, and then you had noted that you were holding off on getting a second appraisal, and that really to test the market, Lauren, it was President, it was your idea, and it was a good idea to call the market participants. We confirmed, we agreed on the value. And so that's where we're at. Now, the timing of the appraisals, I think on this one, we're back and forth in that, first of all, you agree, I guess before I move there, and page 30, you agree with the recommendations that you shouldn't have been involved as much with the development of the valuation, and that going forward, you would make sure they were independent.
Absolutely, and the reason for that is there's a perception as well. I mean, it certainly was, what I was trying to do was to help the process, but it could be perceived as being otherwise. So I want to make sure that there's an extra level of independence moving forward.
Now, the next area, and I think this is the last area before board restructure, two more small areas, if you just bear with me. One is around the timing of the appraisals, and I think we go back and forth. I think the information could have been provided to the board sooner. And there was a draft, it was called a draft appraisal. It was quite substantial, and even the vice chair of the board had noted that it could have been provided to the councillors. I think Councillor Filion, the complainant in this case, was really trying to get information. And management, you have described that you didn't want to give them information that, or anybody information that maybe they couldn't rely on now because maybe it would have been out of date. My view is that the best information available, it would have at least supported a transaction at $10 million. The income stream, net present value, plus the older appraisal, even if it hadn't been signed, there's been a lot of due diligence in around it. So. And even with, and I understand it's a market environment, and I understand that, it's challenging to get appraisals, but it takes 3 to 4 weeks. It might be $7,500, maybe even max up to $15,000 to get an appraisal. The sign consultant wasn't paid, but I'm just saying that when we're delivering it to the board, and we're at the point where they're signing off on a $12 million transaction, and even if it is conditional, it's important to have the substantiation so that they can feel comfortable. And I think that's what created a lot of the misinformation and challenges and this complaint, quite frankly. So I think it's important to learn from that and get that information.
Yes, that's one of the important parts of your review, that you want to give your board as much information as possible. And we were trying to get the appraisal done as quick as possible, but it wasn't in time for the board meeting, and that's why we were going to present it. They wanted it. They approved the deal subject to us presenting the due diligence at another meeting. Mm-hmm. And it's very important to get that appraisal for them before you finalize a transaction. We're trying to deal with that in anything we do in terms of timing's tough sometimes because the market doesn't allow it. Sometimes we're doing environmental studies and we say subject to staff being satisfied, with the report provided, as long as there's no issues. But I like your approach that this is what you should try to do. If not, defer it to the next meeting if you have to.
Yeah, and my challenge on the timing was council had directed that the land be purchased at fair market value at the end of March. everybody knew in the public we were going to move to fair market value. So at that point in time, getting that underway so that by the time the agreement comes is important. And I do know it was a dynamic time where you're still working through the development agreement. But even with that, if you're given a direction to purchase a fair market value, it's important to understand what that looks like and what that is. So I felt it could be earlier. I know you don't quite agree, but we do agree that the board is to be provided with better, full information, and that reflects our prior report where we had mentioned that the timing of information coming to the board and the completeness was a challenge. So that was from the prior report, and so this is reiterated here.
I agree.
Point of order, Mr. Chair.
Point of order?
Thank you very much. This is an incredibly important item, and certainly presentations from both staff and the AG are always in order. While this is an informative exchange, I just wonder, given the agenda that we have, and also we have a visiting counselor here, and there are items that we need to deal with regard to this. Could we just get a sense of a time frame on how long this, while informative, admittedly unorthodox, dialogue is going to continue, so then we know sort of how to continue with the agenda?
Point taken, Councillor, and I just asked if the parties could wrap up because we are pressing on time on this.
Absolutely.
We'll have a chance to dig into these with questions.
Okay, absolutely. So there's two findings left. One is related to challenges I had in the investigation process, and to obtain really consistent explanations has been challenging throughout this time. And the second is related to board functioning. We found that, as we mentioned throughout, that the board, the skill sets at the board, I think, can be broadened, increased. Support from the city clerk's office, I think, is important around procedures, so that when you're discussing substantive matters and if you don't have the procedures appropriate, that's a concern. And so support from the city clerk's office is important, and full information and board training. I think all of that came out of this, but it's not just, I think, particular to this board. I think there are lessons learned here, and although we haven't looked at all boards, it might be worthwhile looking at those lessons as we move forward. Subject to your questions, I'm fine.
Thank you, Madam Auditor, and to the Toronto Parking Authority. With that, I will request any outside councillors to question. Councillor Fillion.
Yes, and if you'll indulge me, I do have quite a few questions. So I'll start with, just to cut to the chase, there's so much material here, it's hard to decipher almost, there's so much. So I'm just going to jump to conclusions. There was an agreement of purchase and sale signed on August 19th, I believe. I contacted the Auditor General. I contacted you September 1st. You sprung into action on September 2nd. Had that not happened, do you believe that this transaction would have gone through at $12.1 million?
12.18.
So you believe without your speedy intervention as a result of my call to you that that's what the result would have been?
Correct.
Okay. Would you say that you received a high level of cooperation from the parking authority staff in your investigation, or not so high?
It was challenging. I guess the explanations were inconsistent, and in the beginning it was very challenging getting documents. So documents started to flow. We were still missing one document even today. But at the end of the day, the explanations kept moving, and therefore it was challenging to nail down what the results were.
Would you say that the Parking Authority Board handled this matter well or not so well?
I looked at the transaction up to and including right to the board. And at the board, I brought my findings that it was, I felt that it was overpaid and the board had stopped it. I think I didn't do an audit of the board, but it's challenging. The results are challenging here.
Okay, so questions of the TPA staff. Who initiated this purchase? Where did it start?
It started when we were looking, okay, so you know in 2010, council authorized real estate to look at this and authorized the EBIA to do a partnership with us. At that time, there was no parking need in that area. So when we were approached way back when, we had no interest. But with the approval of the Metrolinx and the LRT, there was an interest. And we did have for a commuter lot. And we did have...
Get to that in a second.
Sorry. I'm just saying. So
who
we met...
initiated it? Who?
I don't recall. All I know is we had a meeting on site to look at this site in July of 2015. And in attendance was our board members, Giorgio Mamaliti, and representative from the EBIA, and I think the consultant as well.
At any time, anywhere along the way, was there ever a business case prepared for buying this property?
Yes, it's in our board report. That board report has a business case. It's not the business case, and we refer to it, it's not our formal return business case, but the business case, as long as you pay fair market value. We said, first of all, one of the business case was parking demand, that when the LRT is built, there'll be a parking demand. Number two, we looked at pre-development scenarios whereby we would have the flagpole project or the gateway project and then sell back to the market half the property to recoup our land value. So we had a plan in our head, and it was depicted in the board report, most of it, but it's not what you typically see. We didn't have the financial returns that we normally have if it was instantaneous, there was no immediate returns for this property.
The lobbyist, was the lobbyist acting on behalf of the vendor?
No.
Then when the lobbyist came to you and said the vendor will accept $12 million, how would you give any credence to that if the lobbyist wasn't acting on behalf of the vendor?
You would continue with the draft conditional agreement of purchase and sale and see whether the vendor would accept those terms.
And why was the lobbyist familiar with the draft agreement of purchase and sale? A lobbyist for a BIA, why would they be getting a draft agreement of purchase and sale involving a completely different party?
The reason we used the lobbyist to assist us, because he had a previous relationship, because he'd been dealing with that vendor in helping the BIA. And so he just acted as the go-between, if you like, or someone who had a relationship. We had no relationship with this vendor, and so he assisted us, and he always said he was being, retained by the BIA, not the vendor.
I believe the auditor had something to add to that as well.
Yes, to your question around who was at the site, July 27th, a meeting notice indicates, and they may not have been there, but the meeting notice includes the president, Councillor Mamaliti, Sandra Farina from the EVBIA, Paul Scargall, Michael Zaretis, and Marie. That was the meeting notice.
Okay, we will go to committee members for questions, and I'm happy to put a question for a second round to the committee members with their indulgence. Councillor Matlow, I've got you first. Please go ahead.
Thank you, Mr. Chair. How many times has Councillor Mamaliti requested to meet with you, whether it be with the lobbyist, the BIA, or anyone else on this specific matter?
Not many times. I mean, we met on the site. That's all I recall. And then if we talked about it in board meetings, but we never, and we may have met initially when I became president to talk about, this was in 2012. I can't remember if I was president or a VP of real estate, to talk about the site as it related to the original approval by council. So that's the only times. And then
In 2015, did Councillor Mammoliti request to meet you in Las Vegas?
No, no. Councillor Mammoliti is a member of our board. And like Councillor Fillion, who's on our board, they've been to various parking association conferences. And this was a parking association conference.
In what city?
It was in Las Vegas.
That's what I just asked.
But it was a conference where
In
we were
Las Vegas,
attending. Yes, I agree.
Okay, well, you just said it, what, you
No, it was a conference. It wasn't a meeting. I mean, I wasn't meeting.
Did he ask to meet with you in Las Vegas?
No,
He didn't ask to meet with you, so you didn't have a meeting with him?
no. He was an attendee with other board members. I don't call that a meeting. I don't know what, I'm not sure what that,
While at the conference, he didn't make requests to have meetings?
I
Councillor
think
Matlow, if we
there's a
can
little
keep
bit
it
of a
relevant to the report.
communication issue. At the conference, he did mention that he would like to meet on site to review the property.
Okay, that's what I'm referring to.
But it wasn't, it was the way, it wasn't a meeting at the
Getting
conference.
mixed up in the word, yes.
Right, so sorry for
In
that.
Las Vegas, though, he made requests to have meetings on site.
To have a meeting on site at the subject property.
Have you ever felt any undue pressure or have you had an unreasonable request from Councillor Mammoliti with respect to this land deal
No,
at all?
not from Councillor Mammoliti, no.
If not Councillor Mammoliti, then who?
In actual fact, as we mentioned, in August 19th, we signed the conditional agreement of purchase and sale. We were commencing our 60-day due diligence period, and I believe staff, including myself, would have welcomed that time to do our work in a normal manner, in a manner that we've worked on many, many other acquisitions for the Toronto Parking Authority. In my opinion, that whole process was rushed and it was interrupted because of Councillor Fillion's view that he wanted information well in advance of when I was able to prepare the information with a full sum of time. And also, additionally, there was a problem in that by September the 1st, when he contacted the Auditor General, she then started her investigative work on September the 2nd, and while I fully appreciate the work that she needed to do because she needed to report back for the September 15th board meeting and in time, recognizing that there was a due diligence expiration date, it was very, very difficult for us to do the work that
I don't understand something, though. There's a repeated pattern in the AG's report of Councillor Mammoliti either meeting with you or with the lobbyist. There were requests to strategize with the lobbyist and Councillor Mammoliti. They also worked with you to prepare you for media questions, the consultant. And I don't see any record of Councillor Fillion ever trying to pressure or push you into, in fact, moving ahead with this deal. I actually see quite the opposite, that he raised questions about the deal in the first place. So how is it that you could claim that Councillor Fillion in some way pressured you to move ahead with the deal that all the evidence demonstrates, in fact, he's been raising questions about?
With respect, with that question, for me, we had been instructed by council to purchase the property based on fair market value. This is what we were trying to determine. Fact-based decision-making based on what the fair market value of the property is. This is what we were trying to do, and that's where I felt pressured in that I was stopped from trying to do that within a reasonable time frame.
Thank you. Are there other committee members that wish to ask questions? Councillor Lee.
Thank you. Then my question is directed at the VP. According to the Auditor General's report, February 12th, the VP provides the vendor and the lobbyist with a revised draft of purchase agreement and the first draft of the development agreement. Now, I heard earlier that says the lobbyist is not acting on anybody's behalf, but why was the draft of the purchase agreement and development agreement given to lobbyists?
Okay. The lobbyist was copied on the email, and the reason for that was because at that point in time, the vendor wanted to develop the property, so there was a development agreement. We had a lot of difficulty getting the development agreement. The lobbyist represented to us that they had the development agreement and could help us with drafting a document, so that's why he was included on that. In retrospect, going back to the Auditor General's comment, it's probably best to be a little bit more independent, but I can assure you that once the development agreement plans were canceled and we adopted a direct purchase agreement of purchase and sale, then the lobbyist was not copied on those agreements moving forward until the document was executed.
Okay, if this draft agreement was and development agreement was made, why was the board not informed of it? Why was it not brought to the board? Because this was in February 12th, so we had a few board meetings before the March 31st council meeting.
Yeah. Through you, Chair, Mr. Chair, we always, we hadn't done the deal yet. We're just negotiating. If I brought every potential negotiated deal to the board, we'd have a lot of deals there. So it is reviewed during we have a real estate committee, and all an update of potential stuff is put forward there. But unless we had a deal, and we had no deal until August, no signed deal until August of 2016. So that's why you didn't see it earlier. We did get an approval in May from the board because we had that council directive to go seek it. So we seeked your approval to pursue a purchase based on a price with a development agreement. And then even on that one, while we were doing our work, we weren't comfortable and we walked away. And similar to what I say at the end of the day, where we agree to disagree with the AG, we would never have paid that extra $2.63 million unless we thought it was worth it, and that would have been substantiated through an independent business valuator as well.
I would have figured that it would have been the other way around, just like I got on the board this year. And every time it's come to council, we've normally have dealt with it at the board in terms of coming into council. Now, you said earlier that this was going to be all part of the Canada 150 celebration with the gateway feature and all this. So obviously, the Emery Village, BIA, would have been involved and put forward their proposal on what to do with the gateway, with the flagpole. And was this all part of the development agreement?
It would have been. We didn't get to, once we signed the agreement, we're actually, I think we had one meeting with the BIA afterwards. This was part of our due diligence to understand how far they went along on the Gateway project, because at one point I think they retained through the consultant some sort of design person. They had a design and all that stuff. So we had a meeting. And then, everything stopped.
Okay. Thank you.
Thank you, Councillor Lee. Are there any other members of the committee that wish to ask a question? So I will take a moment to ask some, and then I will present the option for another round in a moment. I think my question is for the Chief Corporate Officer. So throughout 2016, while this transaction was unfolding, who in your office was involved in this?
Through the chair, this particular transaction, our staff was not involved with it up front.
So I have in front of me EX 16.4 from July 12, 2016's council meeting on the citywide real estate review. And Direction number 4 says that City Council asked the affected agencies, and I'll paraphrase, to cooperate and coordinate with the real estate transition team when undertaking any real estate transaction or development work of significance, whether in dollar value, city building potential, size of the site, or otherwise. Now, I would figure $12 million is significant, but can you explain to me this particular requirement to coordinate with your office and what has happened with this transaction?
So I'm going to ask Joe Consolidated to talk to it because he was involved after the transaction discussion occurred later on. But the request is that all transactions do go through we have delegated authority to do so as an organization across this, especially for this particular, for the parking authority. I'm going to ask Joe to comment on it, just on the process when he was involved, just so the committee understands that.
Okay, so I apologize. Today I didn't realize I'd be speaking on this matter, so I'm trying to remember the details from a while back. But Lauren is correct in terms of we were engaged to try to acquire this site originally, and I remember conversations with respect to our legal department, with the BIA, to understand what this transaction should actually look like in terms of, one of the questions was, can the BIA own the land, and that type of thing. So we were going through all of that. At the end of the day, it came back that the consultant for the BIA was going to look at other alternatives. And the other alternative was going to the parking authority to ask them to purchase the property, okay? So I, at that point, I'll say, took a back seat to the transaction, and that's when the parking authority began their work to try to come up with a solution to purchase the property.
So we're in this transition phase to a centralized real estate model. And I understand the utility of the motion that was put through in 2016. It means we've got to coordinate with everything. Even though we're not formally there, we're on that pathway. I recall there's a number of transactions that TPA has done. Are you seeing that coordination that's required in this motion occurring? And what is the delegated authority with respect to the TPA and the city? Who can sign off on this stuff? Is it you? Is it them? Is it council?
So the delegated authority, the actual delegated authority only resides with the chief corporate officer. So I have the authority to do a transaction at market value up to $1 million. Josie has 3, I believe. Rob Rossini has 5, and the city manager has up to 10. So what we've encouraged the parking authority to do is to come to us when it falls within those delegated authorities. So it's a market transaction at market value. The area councillor has been consulted on the matter, and if they're in agreement, then we basically would proceed with the delegated authority. If there is disagreement, a lot of the times I would recommend to the CCO that we go to committee and council in order that a councillor's peers can hear the matter and that we're doing it in an open and transparent manner.
Okay, so
That's how the delegated authority works. So we've been having discussions with the parking authority over the last, I'll say, 4, 5, 6 months about how we could make this work.
the last 4 or 5, 6
That they would
months?
use our delegated authority.
Okay.
And if I may, through the chair, what we are also working on the citywide real estate, because you had brought it up earlier, is that we're working a process where all of the organizations be working through the proper delegated approach as we go back to council in Q3, and the parking authority is definitely involved in that at this point in time.
Okay, so if the city manager with the delegated authority, when did his signature have to be on a piece of paper in order for this transaction to occur? Was it the offer? Was it the final point? Did we pass that? Are we in treacherous waters with respect to the delegated authority? And my time is up, but if you can explain to me how that fits into the mix, I would appreciate it.
Normally, we would expect that the delegated authority is the actual final approval of the transaction, okay? So the party that's undertaking the negotiation, they would do all of their due diligence, and hopefully under the governance type of model that we in the Chief Corporate Corporate Officer's Office has come up with to make sure that we're protecting the city's interests on, like, when do you do an appraisal? How do you engage the appraiser? What's the terms of reference? That type of thing. So I'm going in a lot of detail here, but frankly, it comes down to the approval is, when we do undertake an approval, we look at all of the due diligence that had occurred. We make sure that that's available in the Chief Corporate Officer's files, okay, so that we can produce those documents later. We post it on the city's website to show how we made those decisions. We treat it as if it was a council report because it's that important, okay? So that's how we go about undertaking that work.
Okay, thank you. I believe members of the committee and visiting councilors would like a second round. Are there any objections on the committee to go to a second round? With that, Councillor Fillion.
Quick question of Mr. Casale. Is it normal for the city to have a signed agreement of purchase and sale before doing a evaluation of the value of the property?
I would say I would normally have an idea of what the property is worth, either through our internal appraisal services or through an outside appraisal, before I'd undertake the transaction.
So what happened here was not normal by city standards to have a signed agreement of purchase and sale and then do
In terms of my
appraisal.
processes, that would not be what I would do.
So questions of TPA staff. What month was it that the lobbyist for the BIA, who as far as we know was not acting for the vendor, communicated that the acceptable purchase price would be $12 million? What month was that?
I believe it was first communicated in October or November of 2015. I would like to add that, remember, that also includes the development agreement. So the appraisal, if done at that point in time, would have a different scope than what it ultimately ended up having.
But so the $12 million figure, whatever it included, arrived in October, November of 2015, and that number stayed the same right through to the signing of the agreement of purchase and sale the following August.
Within a couple $100,000, yes. There were two minor adjustments, one for $100,000 and one for $80,000.
In May, a report came, and it wasn't part of the, I'm just getting you to corroborate this, was not part of the standard agenda. It was issued, it was a late item, and it was an in-camera item, and it was to request the authority to enter into an agreement of purchase and sale for $12 million. Is that correct?
That's correct.
And when I asked for information that would justify the purchase of this piece of property for $12 million, was that applying inappropriate pressure?
I do not view that as being pressure.
And subsequent to that, when I contacted either of you and said, I'm still waiting for information that would justify the purchase of this property at that price, was that inappropriate pressure?
Taken in isolation, I would say that's not an undue amount of pressure. Where the pressure resulted was from the fact that we did, I met with you on September the 1st.
I'm getting to that.
Okay.
I'm getting to that. So far, no inappropriate pressure. Okay. And are you agreeing to that? No inappropriate pressure up to, I haven't got to July yet. Okay, so.
That's fine.
So we get to July. Again, there is a report, an in-camera report issued after the agenda goes out as a last-minute item. There is still no appraisal. I have not heard anything more from you, and I object to that and don't want the transaction to proceed until that information is provided. Was that inappropriate pressure?
No, taken in isolation, that was not
Well,
inappropriate
not taken in
pressure.
isolation, was it?
That's fine. That's
Okay,
one of the reasons
so-
why I wanted to meet with you to explain the process on September the 1st.
Yes, and when I first asked to meet, what answer did I get? When I first requested to see what was in the file, what was the initial response I received?
I'm sorry, I don't
Would
know.
it be correct, Lauren, that I was first told I could not see the file, and then I was subsequently told, okay, you could come in?
We weren't, when you did ask, we weren't sure, because we've never had a single board member come up and look at a file, and we weren't sure, is it appropriate to share a single file with one board member, or should we be kind of issuing it to the board? So that goes to this governance thing that the AG is talking about, and in terms of protocol, because I've never had that occur. So I did consult, and it was okay.
So an agreement of purchase and sale has been signed, and a board member who is also a member of council is still looking for information that would justify the purchase and the purchase price, and asks for a meeting to see what's in the file. Is that inappropriate pressure?
Last question.
That's not inappropriate pressure, given that the council recognizes that it's in a conditional agreement and there's a 60-day due diligence period that commenced August the 19th.
So I may ask for a third round, Mr. Chair.
Understood. Thank you. Councillor Matlow, you're next on the list.
Thank you. Really, just to get back to my last question around your answer with regard to Councillor Fillion, because there were some suggestions made. And I want to ask the Auditor General, certainly there is a pattern of Councillor Mammoliti's involvement in this discussion in various ways. Sometimes the consultant is clearly representing the Emery Village BIA, the lobbyist. At other times, there are claims that he is prepping the Toronto Parking Authority to answer media questions or even respond to questions to their own board. And there just seems to be a lot of fluidity that crosses lines that we're accustomed to, that could even be characterized as a conflict. Do you believe that there have been lines crossed with respect to conflicts, just from your observations? And I asked the staff from the Parking Authority about Councillor Mammoliti's role, and the answer I received was that, in fact, it was Councillor Fillion's pressure that they felt. Is there any evidence, aside from questions that Councillor Fillion has asked with regard to concerns over this transaction, is there any evidence that would indicate that Councillor Fillion advocated in any way or put any pressure to actually see this land, this acquisition move forward?
Thank you, and through the chair. I've outlined in my report a lot of your answers. In first case, in relation to Councillor Fillion, I have outlined where...
But I'm asking you to sort of vocalize.
Yeah, well, I've outlined, for example, where there were questions that are appropriate, and also where, statements were made to the VP, which was a concern. So we have the balance of both. In relation to the lobbyist, I've outlined clearly my concern about conflicts in that area. And in relation to Councillor Mammoliti, it's for the Integrity Commissioner to discuss about actions of councillors. I have outlined in the chronology a lot of information related to the story of what happened, and I would hope that would be informative. So it would be for her to do.
But do you believe that it would be reasonable for the Integrity Commissioner to explore this matter?
I believe that if there's any, there's questions being asked here at the table, and it would be appropriate to have a referral to have answers to those questions.
So the answer is yes. Do you believe that it would be appropriate for the police to be advised of the matter?
I think that it's premature to discuss that at this table at this time. I don't see, I mean, at this time, I'm presenting my report, and I'm not going to comment on that.
I was just playing poker for a moment.
The protocols, if ever, in any case, and there's a disclosure of wrongdoing protocol that's followed that was voted on by council in relation to matters, and I've commented on this from a process perspective. I haven't turned my mind to other matters, but if there's a protocol to be followed from the disclosure of wrongdoing framework voted on and passed by council.
Okay, the last question to TPA staff. Do you see why, I imagine you have read the 72-page report. Do you see why, if one reads this report, it raises enormous and significant questions, I think, to a reasonable person about the interactions between the lobbyist, the BIA, the sign proponent, developer, you? There seems to be far too many interactions that don't seem to be clear about who represents who and whose interest is actually being promoted or supported. At times, there's just kind of everyone's in a room helping each other, and it just doesn't seem to be clear. And do you also, I don't understand, for example, how many parking spots were envisaged for this site? You're a parking authority.
I just try to remember the design. Around 70 spaces.
70 spaces? And how much space would the sign take up?
Last question.
Little space on the ground. I don't know.
It just seemed like there was more of a focus on the sign than the parking.
As I said, the focus was on future parking because of the LRT, and in the interim, the business case was to use the sign to support the return. And eventually, when a development happened on the gateway, potentially there would be, the city could have sold the other half for future development.
Thank you.
So that was the intention.
Are there any other committee members? Councillor Lee.
Question of the CCO. Is it normal for a purchaser to want to pay the highest possible price? Is it normal for the purchaser to want to pay for the highest price?
Through the chair, depends on the situation that we're dealing with, right? But that's not always the norm.
But it's not normal.
No.
Yet on line 46 of the report from the AG, the VP and President agreed with the sign consultant statement because the current sign revenue did not support the purchase price. So the TPA wanted to know what possibility was to increase the value of the sign component. What answer do you have for that?
We've been directed by council to purchase the property at fair market value. We had, through very extensive negotiations, tied up the property on a conditional basis at $12 million. So we're trying to essentially go through and try and, based on fact-based decision-making, try and determine what would the maximum value we could pay, being the fair market value.
Okay. And further on report, you also had sent the valuation to the consultant and asked them to backdate the report that they sent back to you to September 1st. What's the reason for that? You say there's no reason for it, but there has to be a reason for it.
Yes, I addressed this question earlier, but the reason for that is when I do valuations or consulting reports, oftentimes I will use the date either at the beginning of the month or the end of the previous month. And the reason for that is because, especially when you're dealing with comparable properties, you're dealing with a database or a group of properties that have transacted up to a point in time. And so to have it at a date that it might be in mid-month, or let's say, as an example, the 8th of September, would denote that there would be a level of activity that you're reviewing the market between the 1st and the 8th of September, which simply isn't true. So it's just a guideline as to as at what date have you reviewed the marketplace with respect to comparables to come up with your opinion of value. And I wanted to reiterate, it does not and did not in any way was that decision to ask the sign consultant to backdate anything to do with the Auditor General starting her investigations on the 2nd of September.
Thank you.
Thank you, Councillor Lee. Are there any other councillors on the committee that wish to ask questions? I will ask a couple then. Madam Auditor, I know that in the last, and forgive me, it's 12 to 18 months, we did have at council a discussion of a protocol between our accountability officers where, I guess for the first time ever, there could be a sharing of an information or a case, especially a complex case where it involves multiple jurisdictions of the different accountability officers. In this report, you mention lobbyists and you mention other councillors, which leads me to think, what is the connection to any work that the lobbyist registrar may need to do or the integrity commissioner? Have you exercised or do you intend to exercise any of those provisions? Or is there utility in this committee considering requesting those officers to have a look at their affected parts in this report?
Thank you. Under the agreement, I've had to seek some guidance with the lobbyist register, so I know that she is aware of this, and she may do some work, but I think it's completely appropriate for this committee to clear the air if they have questions in relation to lobbyist registry and also in relation to councillors to refer those matters on, and I would fully support that. If you didn't, I would be referring it anyway, so.
Thank you. I also understand that you've clarified the scope of the audit. The audit was on the transaction, but in the course of your work on this, you identified some concerns over the board. And I mean, I guess it's the governance around the board, the support that they have. And I wondered who in the city might be able to offer an opinion on that, who is concerned with board governance. It is only the Auditor General's office that has just sort of touched upon these subjects because they were periphery to the report. But if the committee wished to take this further, who would we ask to weigh in on matters concerning the board and how the board works with the city?
Well, I think there's a tripartite answer there because a three-pronged approach. In relation to actions of individual board members, that's under the purview of the Integrity Commissioner, and if there's a question in that area, then that would be referred to her. In relation to board governance, I have been present at a few of the meetings, I have seen the interactions, I've seen challenges in relation to procedure following, and I think, and also bringing information to the board. I think that's going to help the board go forward, but from there, I think it's a question of specialists, people who train in, and this is applicable to many boards, designations potentially in the area of board directors, training specifically to support the board, and the board did welcome that. They could see now what can happen. The city clerk's office, I think, really have always been for us and this committee, kept us on the side of the angels, I would say. Legal services is a key prong for and a key support for them, and I think that they should be present at every board meeting. I think to support the board, you need to get that support around you to make sure that everybody has confidence, and then you have the support you need to keep that confidence for the board and keep the confidence for the public. So they are the three areas, board members to the Integrity Commissioner. I've looked at some of the governance, but now you need specialists in to support.
And so in terms of the governance and the relationship with the city's organization, the council, is this also a city manager type discussion as well for them to consider anything board structure or the rules about how they interact with this organization?
Well, I think it makes sense from the perspective that the city manager has a section that supports boards and agencies. And so from that perspective, looking across all boards and agencies and seeing the better practices and potentially leveraging that together as a group to build that strength, that's critically important. Albeit there's questions that have to be answered here within this file that is separate from that. But as a board function going forward, there's a systemic thing that the city manager can leverage in on.
Thank you. Councillor Fillion, you had indicated a desire for a third round. Do you still have that? So what I'll do with sensitivity to the committee, if we could actually just do a vote on this one, just to make sure you're all still okay with this. We are a bit long with the questions. So all those in favor of extending to a third round? Those opposed? Thank you, Councillor Fillion.
Thank you. Just a question of the COO, sorry. In your experience, does highest and best use normally include a hypothetical evaluation of a digital sign that doesn't exist and wouldn't be allowed under city bylaws? Is that any kind of a normal practice?
Our terms of reference on an appraisal would take into account any, I'll say, any parts of the property that will generate a monetary return. So if we're undertaking an appraisal for highest and best use, we would have to look at whatever is developed there, whether or not the city would allow the sign to continue. Because a lot of the times when we redevelop a site, the city will say, no, this sign now has to be taken down because this is what the development should look like, okay? So I don't know where the city's planning department would have fallen on that sign. So I would also want to value that sign to understand what kind of revenue it would have generated and then what the capital amount of that sign would have been.
That's the existing sign you're talking about.
The existing sign,
Yeah,
yeah.
would we normally include a sign that doesn't exist, hasn't been applied for, and that doesn't comply with city bylaws?
I think we would look at all the city's policies related at that, and right now, my general no, I'm not going to comment on it.
Okay. Questions of the TPA staff. There's reference made to the report of March 2016 and the section, I believe, that Mr. Kleiman signed off on. What communications did you have with the author of that report while it was in preparation? What would his understanding have been based on your conversations with him?
Jeffrey Kleiman's contacted me and said, I'm writing a report to council with respect to public realm and Metrolinx. There's a section on the property, and he asked me to review it, his wording, to make sure that it was indeed accurate from a factual perspective.
And would he have gotten the impression from you that there was some sort of business case for purchasing this property?
He would have known that we had had discussion with the vendor with respect to that property.
And would he have been told that a purchase price had already been agreed to?
I don't recall if he would have been told that. I doubt it, because if you think about it, a price had not been agreed to. We had not signed an agreement of purchase and sale, even on a conditional basis. We have been told that that was a purchase price that the vendor would support, but if you recall at that time, it was also based on a different set of terms in that it included the development agreement.
Yeah, I believe there's something different in the report, but I won't turn to it. You'd mentioned that there was a full intention of having the sign valued by an independent evaluator. At what point was that the intention? When was that the intention?
During the due diligence period.
So starting when?
after the agreement, the conditional agreement was executed, being August the 19th.
Was it the intention when I met with you on September 1st?
Absolutely. I think we talked about the process and the fact that we would be going into due diligence. There's a lot of due diligence that had to be done as it relates to this property, not just the sign. It also included environmental, there was title review, there was survey. There was a lot of work that needed to be done.
Would you have said anything to the effect that it would be anybody other than the sign evaluator doing an evaluation of this property, evaluation of this sign?
I'm sorry, I didn't hear that question.
Would you have told me that it would be anybody other than the sign evaluator doing an evaluation of this sign?
I would have said that we had to review normal market conditions.
You know what? I'm just gonna leave it. Thank you.
Thank you, Councillor Fillion. Okay. At this point, we will invite members of council to speak to the item. Councillor Fillion.
You know, I'd like to thank the Auditor General for a good report. I hope everybody reads all 76 pages. It is very hard to follow verbally. It is really difficult to follow unless you fairly slowly read the 76 pages, and then I think what happened here is very clear. You know, and I agree with what I believe are the Auditor General's conclusions that had I not contacted her on September 1st and had she not immediately sprung into action the next morning, that this transaction would have gone through. There's nothing that I've seen that would make me think otherwise, and a lot that's in here that reinforces that opinion. Why that is the case, why a parking authority would want to purchase a property without what I would consider a normal business case, as in we're going to have this many parking spots, it's going to produce this much in parking revenue, et cetera, without any of that, why it would purchase it and then seem to go to great trouble to try to have the evaluation match the purchase price desired by the vendor. I have no explanation for why that would happen, but it's very disturbing, and I hope in time we do get to the bottom of that.
Thank you, Councillor. As the chair, I'm going to speak first on this. I've got a couple of motions, which I hope will capture what's on my fellow committee members' minds. Madam Clerk, if you could just present those. So the first is an affirmation that Toronto Parking Authority be directed through Real Estate Services Division's delegated authority approval process and due diligence procedures. Based on the questions that I had asked, I'm not convinced that we've been following that within the city. I'm convinced that if we had followed the procedures that we have already today, we may have had a different outcome. And the second is based on what I heard from the Auditor General and understanding the narrowness of her look at this in the scope of the audit, and not at a fault, but just what she focused on, there may be some more advice that council could have from the city manager with respect to the board, with respect to governance and questions about management of employees at TPA. And for that, I would invite the city manager then to report through the executive committee on anything he sees fit. I would just like to take a moment to thank the Auditor General for what looked to be a very extensive and lengthy investigation with a very comprehensive report. It has uncovered a number of concerns that a lot of us are just continuing to get our heads wrapped around because of the complexity of this. I think the overall arching message, though, is that there is some concern, and as you put it in the conclusions, some impact on the confidence of the city and how it does business. And for that, I think we are headed on a path with transformation of real estate into a different organization and a different body of recapturing that. And this is not just the audit, the only audit today that we talked about real estate. I'll remind everybody that we talked about Union Station, and part of the discussion there was, yes, we're at a point today, but where are we going tomorrow, and how will things be better? And each time we ask those questions, we do get answers that are reassuring, and we only began to start to ask some of them right now, but what I hope is that over time, people will be more confident with our processes and feel reassured that we are centrally looking at these types of decisions, and we've got very, very strong supports and processes in place to manage our real estate affairs. With that, I hope you'll support these motions. Councillor Matlow, you had indicated either a question for me or absolutely.
So, Mr. Chair, so item 1 as part of your motion seems fine. Item 2, may I ask you, was that provided to you by the mayor's office, or did you come up with it? And there's a reason why I asked that.
Yeah. I've spoken to a couple of councillors about this particular motion, and I understand it's in similar theme to others.
Yeah.
And I also understand that executive committee is the right route to go through.
But was it provided by the mayor's office?
I have spoken to a number of people about that, including yourself, with a similar motion.
Okay, but so you don't want to answer that. But the reason why I asked that is, would you consider, if it did, would you consider respectfully withdrawing portion 2 of your motion and supporting the motion that I'm going to be moving on behalf of Councillor Fillion, which was in fact done in consultation with the city manager, which would give the city manager more ability to actually do what he deems fit to do, rather than having it controlled at the executive committee and through the mayor's office, but rather allow him simply just either to come to audit committee or frankly to do, or council rather, or to take other steps that he deems fit, rather than constricted in this fashion. Will you consider that between the time that this is moved and the time that I move the other item?
I'll consider anything you put forward, but I will say, though, that I think the executive committee is the place to discuss governance issues rather than audit committee, and I think it requires that step. I, too, did have discussions with the city manager about possible reporting, and took into consideration what I heard when I spoke to him. I also am very cognizant about what can and may be achieved between now and council, which isn't a lot of time. And I think the step through executive committee affords an opportunity to develop some meaningful advice.
In a moment, I'll articulate in more detail why I believe that I'll speak in a moment.
Fair enough. With that, are there any, I think Councillor Matlow, you're first on the list, so away you go.
So
I guess I'd like to speak to that issue if it's possible.
Well, our procedures don't allow you to speak, but I'll put it to the committee members. Are there any objections to modifying the procedure to allow Councillor Fillion to speak? None. Councillor Fillion, please go ahead.
Thank you. And I just want to reiterate what Councillor Matlow was saying. It's not that there's anything wrong with that motion, and certainly the executive committee would be the right place where most things should go. Or the audit committee, or the appropriate committee, and I'm sure the city manager would do that. I was just looking for a motion that gave him broader latitude. So if, for example, he has something that he wants to add at the forthcoming council meeting where this report would be going, he would have the ability to do that. He may choose not to, but this motion would, even if he did have something to say, then he would be prohibited by this motion, because it would force him to go through the next cycle executive committee. I'm sure that's not what you intended, but so if there was something that would just give the city manager broader latitude to report to this coming council or directly to any council meeting, should he choose to, that's all.
I'm going to raise my own point of order on this, or I guess ask the clerks to address a specific procedural bylaw question. And that is, if we can clarify for committee to assist in the decision-making before us. I understand that the city manager, as an official, is able to report at any time on this matter or another matter, and thus could come to council with a supplementary report. So respecting the point that Councillor Fillion made, it doesn't necessarily need to be enshrined in a motion. And I wondered if the clerk could confirm that is indeed accurate with respect to our procedural bylaw.
May I actually add a supplementary on to your point?
Yep, please. Yep.
In concert with it, that the motion that you're aware of that I'm about to move, are they in any way in conflict, or could they both be approved so that it goes both to the executive but also directs the city manager to be able to bring it to the July council or other maybe they aren't in conflict?
Madam Clerk?
The city manager can report to the audit committee or to the executive committee, depending on the issue at hand before them. So if you give us a couple of minutes, maybe we can work on a combined motion that might satisfy both, both to audit and both to exec.
Fair enough.
Okay. So I'll move my motion just to have it there, but then we can keep working on it together.
I think you're next up in the speaking order, so if you wanted to.
On theme of what we're discussing right now, this motion is on behalf of Councillor Fillion, but in consultation with the city manager. And what this does, and perhaps we can combine the motions in a constructive way that I don't see that we're at odds. It's more just about how we frame it. To be able to ensure that the city manager has the latitude to take the necessary steps to deal with this effectively. We've got a situation here, and I'm sorry, I just need to ask. I know there's an important conversation, but could you folks just quiet down just a little bit? It's just hard to concentrate. Thank you. We have a situation here that just smells. It really smells. And I'm going to say this in a way that I don't want to unintentionally slander anyone, but it just, from my experience, when you have a combination of Councillor Giorgio Memoliti, who has fought tooth and nail against the LRT on Finch, has basically said he's going to do everything he can to stop an LRT from ever existing there, and then is involved in supporting the acquisition of land to provide parking all of a sudden for an LRT that he doesn't want to exist. But then the focus of the entire narrative and conversation that I've seen was never on parking. In fact, it took a moment for the president of the TPA to even kind of remember how many spots they would even envisage in the future, or if they'd keep all the property, or if they'd sell part of the property eventually. It was never about parking, it seems. But the preponderance of the focus was always on a sign that someone was going to make money off, because signs make people a lot of money. And there enters a lobbyist who has represented and worked with almost every character in this story. Whether it be by getting a fee from every player, or by working with the TPA on media advice and how to respond to the board. And this lobbyist seemed to enter at every single place in this story, which should raise eyebrows and raise questions by any honest person. And then there's this flagpole. So you want a sign to make somebody money, some flagpole that's been mused about for years, and a property that there was never a business case
that made any sense, at least presented to anyone that I've seen. But not only that, but it looked like the TPA was about to go ahead. At the 11th hour, they were about to go ahead and actually acquire this property for almost $2 million, roughly $2 million above the fair market value. And it was only because of both Councillor Fillion and the Auditor General's intervention that it didn't go as far as it could have. $2 million, like that. So then it makes, I think, a reasonable person wonder. I'm not making any allegations, but it just makes one wonder, why would that happen? Is there somebody who benefits from that? Like, it makes no sense. It smells, and it smells really bad. And many of the responses that I heard today just didn't seem reasonable or believable. I don't trust that every player involved in this simply just went, oh, you know, I can't believe this all just happened. Something went really wrong here, and there were deliberate decisions made that ended up with something really wrong happening here. So the city manager needs to look into this, just as he did with other matters that have recently come before us, and come to his own conclusions and provide us some advice. I also believe that the Integrity Commissioner needs to be advised of some of the behavior that we've witnessed through this journey. And while the Auditor General very responsibly addressed my question with respect to the police, I don't think it would be premature at all to suggest that that while there is no clear evidence of any fraudulent behavior occurring, I think it's reasonable to ask, did something untowards happen, and should the police be engaged? Because everything about this stinks. And I want to commend both, and I'll just conclude, commend both the Auditor General and her staff for, once again, a very detailed, 76 pages of information for us. And also for Councillor Fillion, you know, whether one believes that he was always as temperate as he could have been or not, his entire heart and motivation was about trying to avoid something bad from happening. And I want to credit him for doing so.
Thank you, Councillor Matlow. Councillor Carmichael-Greb.
Thank you. I'm not going to be speaking to the issues that we've just discussed. I just want to point out recommendation number 4 to recommend that at least one board member on each agency should hold a director's designation qualification. I just want to make sure that this doesn't get, you know, swept under and no one realizes this. This is something that we are desperately needing in the city. We are so far behind on our boards, so far behind the private sector on this. I just completed my director's education program, and I believe every councillor should go through that. To me, this issue is the right questions weren't asked, attention wasn't paid to certain issues, and that responsibility lies on the board. So I think it is very important that I mean, you've put the recommendation of just one. I think every board member should have the qualifications to be on that board, should hold that. So I just want to make sure that that isn't left under and nothing is mentioned on that. I think that's really important recommendation that we need.
Thank you. With that, are there any other members of the committee that wish to speak? Thank you. I'm just going to pause for a moment. I know the clerk is just about to get the motions up on the screen. I think we do. I think we've cobbled something together into one. If I can just give a moment. I'll say my thank you to the clerk right now for working quickly and under pressure. Fantastic. So this is the combined motion from Councillor Matlow and myself, which replaces, I guess, number 2. And if we can see item number 1. And I'm also will confirm that we're moving the recommendations of the report. With that, may I, Madam Clerk, can we vote together as a single unit? So with that, I'll ask the committee to vote on that. All those in favor of the combined recommendations? Any opposed? That is carried. Okay. So we'll go back to item number 4, which is the financial statements. Councillor Matlow, I know you had held one of them, so I'll just clarify. It's AU 9.4, financial statements for the year ended December 31st, 2016, agencies and corporations. Specifically, item 4C, Toronto Parking Authority 2016 financial statements. Councillor Matlow, you had held that item. Do you have any questions for staff?
No, I don't.
Councillor Matlow, would you like to speak to the item?
No.
May we have a mover?
If somebody would like to move the recommendations, I'm happy.
Councillor Lee, you're moving the staff recommendations. All those in favor? Any opposed? That is carried. Okay. Next item is AU 9.13, which is the Auditor General's 2017 status report and outstanding audit recommendations for cities, city agencies, and corporations. That is held as we have a speaker. Sorry, we have 3 speakers. The first speaker on the list is Florence Lutel. I wonder if Florence is available to speak on this. Thank you. And just for clarity, Ms. Lutel has declined to speak. You want to take a moment to go and review the materials. Forgive me, ma'am, I can't hear from... Okay, thank you for letting us know. Absolutely. I believe these items go to council, and so therefore you would be able to submit comments in writing speaking to the specific item prior to the July 4th council meeting. Thank you. The next speaker on the list is Miguel Avila Velarde. Is Miguel available? There we go. Welcome, Miguel. You have 5 minutes.
Thank you. I'm here to speak as a parent of 3 children. And I just want to inform you that I'm here to bring some fresh news. I guess you guys wonder what happened to the pay duty recommendation from the city. I'm talking about item EX 24.13. I believe that's no, sorry, AX 14.2. That was a letter, a decision by council to ask the province, what do we need to do to encourage the citizens of Toronto to become, flag bearers, watch potholes? Well, what it really requires to change on the Highway Traffic Act, Section 134. So you have a copy of this letter? Anybody have a copy of my letter? Okay. And it says in the letter that they have reviewed the request from the City Council, And they're still doing some recommendations, more studies. Again, I'm here to speak as a parent. And in 2 years, one of my daughters is going to graduate from school. And you know what? I would like her to have a job. I live in Regent Park. You probably are aware the problems we live with every day, the lack of good employment. There's a huge demand for work, and I'm looking the best interest for my community of Regent Park, because it's an area affected by so much crime, there's no opportunities. What we have is, low-paying jobs, and really, it's not the way to go. Here, we have a situation where it's a monopoly that is only controlled by the Toronto Police Union in cooperation with the Toronto Police Services Board. Councillor Chinley is here with us, and he probably can tell us more about what you think. You remember this action plan forward? I told you many times, this is fake news. I'm sorry, I want to say apologetically, it's bad, it's not going to happen. Because as you're aware, next year, the police and yourself, you're going to be talking about the next collective agreement. And I'm sure that they're going to say, wait a minute, this is our job, this is our monopoly, this is our boys' clubs, exclusive game in the city. We cannot allow anybody else to have a second job but us, the police. Come on, you don't need to have a training, extensive training in what, directing traffic? How many of you knows girls and Boy Scouts? Have you ever seen girls and Boy Scouts directing traffic?
No.
You gotta go. You gotta see that. Do you know when we have a few years ago, we have a blackout? Do you know who were directing the traffic? The citizens were directing traffic. So, and the letter says, oh no, we can't allow other citizens but the police to do this job function. I mean, it's basically a lie, an insult in my face. As a parent who is demanding good jobs for people, I mean, for my children, I really had to step up to this. See, I want to give you an example. What's going on in my community? What kind of jobs are we getting? I want you to look at this poster. Become a bake oven animator. Is that a kind of job that really is going to make people to move forward in a very expensive city as is Toronto? I mean, these are the jobs that are promoted in my community, bake oven animators. However, we see that the $68 an hour, according to the report from the city manager, is what police officers are making an hour. You will never see a big oven animator making $68 an hour. It's not going to happen, not even in working for McDonald's. So my request to you again, this is a matter that we need to take a political willingness to change. As the promise, please review it, make the necessary changes to the Section 134 of the Highway Traffic Act, because we really need to provide good jobs to Torontonians. And furthermore, I believe the Auditor General has committed to send a report back to the Toronto Police in regards to their operating budget for 2017 or 2018. There was a variation on the dates, but I'm sure she got my email because I sent an email to our AG.
Thank you.
Oh, is my time over?
It is.
Oh.
Thank you for speaking.
I have so many things to say. But anyway, thanks so much for letting me speak my mind, and I hope we can move forward with changes that will benefit everybody.
Thank you. Are there any questions of the speaker from the committee members? Thank you again. Are there any questions of staff from the committee members? Seeing none, are there any committee members wishing to speak on this item? Seeing none, may I have someone move the recommendation? My apologies, Derek. Couldn't see you behind the pillar. And there you are at the bottom of the page. Derek, thank you. Welcome. You have 5 minutes.
So this item deals with the Toronto Police Service, and in it, it mentions parking enforcement review, court services review, review of police training, opportunities for improvement, revenue controls review of parking enforcement unit, and the transformational task force twice. I don't know how many people know this, but the transformational task force never got back to the City of Toronto in regards to the administrative penalty system. Councillor Lee probably remembers me mentioning this a few months ago. You guys made some sort of instructions or directions to the transformational task force to get back in regards to the administrative penalty system. But the Toronto Police have been looking for money in regards to the administrative penalty system, which Councillor Lee is. Am I at 6 minutes already?
No, you're at 56 seconds.
Oh, okay. That one's it. So I just wanted to mention something from Godbout versus the City of Longee, 1997. The Supreme Court of Canada said, "This last point was discussed in some detail in McCutcheon and the City of Toronto, 1983 Ontario Superior Court, wherein considering the very question of whether municipalities are subject to the Charter, Lyndon J., as he then was, stated, Counsel for the respondents, City of Toronto, point out that there is no express mention of municipal governments and their bylaws in Section 32, which provides that the Charter applies to the Parliament and Government of Canada and the Legislature and Government of each province. Absent a specific reference to municipal governments in Section 32.1, it is contended that the Charter does not apply to them. This cannot be the case, for it would permit circumvention of the Charter through delegation to any body that is not classified as part of the Government of Canada or of a province." Now, this is exactly what is going on here in regards to this administrative penalty system. This is a circumvention of the Charter. Section 11D says, "Any person charged with an offense has the right to be presumed innocent until proven guilty according to law in a fair and public hearing by an independent and impartial tribunal." Well, okay, so in the future, if someone gets a ticket, how fair is it going to be if you're going to go to this fake court with a fake judge, and both the fake judge and the prosecutor are both going to be City of Toronto employees? How impartial is this tribunal going to be to give you a fair trial if both the fake judge and the prosecutor are going to be City of Toronto employees? And how fair is this independent tribunal going to be if both the fake judge and the prosecutor are going to be City of Toronto employees? It's not. That's why we have someone who's impartial, neutral arbiter, doesn't care about the City of Toronto side, doesn't care about my side, just wants to hear both sides and make a decision. So,
Okay.
as it stands now, there is also, I read up on the Auditor General, and I think I saw that she's a non-practicing lawyer, so I just wanted to refresh her memory on the maxim of law. Oh, I forgot this part. So the Toronto Police Service is asking for a good chunk of change in regards to this APS. So I did a Freedom of Information request, and this is one page here. That's pretty small print, but what it says is Ontario drops proposal to take traffic tickets out of the courts. That's from like your own city clerk's division dug that up. That's a bit of a problem. The problem is that the City of Toronto is just so brazen and overtly disobeying the Attorney General's office. I mean, I don't even have words to describe this, what's going on here. I mean, it's the most unbelievable thing I've ever heard. Because that article from Allison Jones even has a quote from Jenna Manone, a spokeswoman for the Attorney General. "Based on the feedback we received, we have decided to focus our efforts on improving the existing court-based system for disputing and paying traffic tickets and other POA charges, rather than pursuing an administrative monetary penalty system model." That's Jenna Manone, spokeswoman for the Attorney. That's the Attorney General's office. Like, is this place that corrupt that you literally disobey and ignore the Attorney General's office? So part of the reason why I'm here is because it seems like the Auditor General actually cares about having things done the right way. And I would just direct her to, remember last time I was here, I pointed out how she mentioned trust but verify. So from one general to another, if she could just like pick up the phone and say, "Hey, Attorney General Yasser Naqvi, like, is this true?" Is this what happened and we're still going ahead with it? Because if that's the case, every cent of the people's money that's being put towards this administrative penalty system is just flat out fraud. It's breach of the trust. And like, I can't believe that the city of Toronto would even dare to try and pull a stunt like this.
Thank you for speaking to us.
Oh, okay.
And my apologies for the clocks being out of sync.
You're a good guy, so I'll take it.
Are there any questions from the committee for the speaker? Seeing none, thank you once again. Don't tell anybody. There is a recent addition to the speakers list, Jeff Panzer. Welcome, Jeff. You have 5 minutes.
Thank you. I think we need commercial rent control in Toronto and throughout the province. I think that a lot of businesses are going belly up because they can't afford unlimited rental increases from landlords. I think 3% should be the maximum increase by a landlord to a business owner. We have many cases, whether it's Dangerous Dan's restaurant on Queen Street East, closing after 19 years because of an 80% increase in his rent, or the Hard Rock Cafe at Yonge Dundas Square, closing because they went from a $1 million a year rent to now having to pay $2 million a year. There are a lot of businesses that are being destroyed in this city and a lot of people thrown out of work because of unlimited increases by landlords to business owners. I think we need commercial rent control. I recognize it's probably provincial jurisdiction, but I hope the city will make a statement in support of commercial rent control, that it would be a maximum increase of 3% a year on a business owner. That's what I'm hoping that City Council one day will do. Thank you.
Thank you very much. Are there any questions of the speaker from the committee members? Thank you again for speaking to us.
Thanks.
Okay, AU 9.13. Are there any questions of staff from the committee members? Are there any committee members wishing to speak? May I have a motion to recommend that City Council adopt the staff recommendation? Councillor Ford. All those in favor? Those opposed, if any? And that is carried. AU 9.15, Audit Work Plan 2017 Update and 2018 New Audits. We do have a speaker. I see Derek behind the column there. Welcome, Derek. You have 5 minutes, and I'm going to try to get these clocks to work properly for you. There we go.
Okay, so that is the police officer's manual, page 628. It defines for police officers that the rule of law is a rule of law is a legal principle of general application sanctioned by the recognition of authorities that is usually expressed in the form of a maxim or logical proposition. It is called a rule because in doubtful or unforeseen cases, it is a guide or norm for a decision. So I want to speak on the water billing and collection phase one that's mentioned in this item. Overdue water account collections require strengthening. Question from last time we were here from you, Councillor Holiday, and at hour 4, minute 20, 50 seconds, Lou DiGeronimo replies, City Council did authorize the creation of what we call legacy fees. If you didn't allow us in your property to install a meter and you have no meter, there is a legacy fee charge. And the Auditor General here then follows up with a comment in regards to recommending basically on trying to avoid disputes and wasting staff time. Now this is something I just wanted to share here. This is a Barbara From consultation regarding the Transformational Task Force, where I asked Chief Saunders a question that everyone should know here. His response was, well, Derek, he knows my first name. It's a loaded question because the answer to that is no. we wouldn't have a problem arresting anyone that is committing any criminal offense. That's what one of our functions in policing are. It's not the only function, but it is an important function. My question to Chief Saunders was asked, would the Toronto Police have a problem with arresting a City of Toronto employee for committing fraud, breach of trust? Now, the reason I bring this up is because I went through this whole water meter thing with the City of Toronto, and I spoke to Carlo Casali. He's actually a decent guy, reasonable to deal with. And he mentioned to me that the City of Toronto here is providing a service. This is Justice Graham Mule. I was in court one day, sitting at the back. I wasn't being charged with anything. But what he had to say in regards to this, I took note of it. We just can't have people going around and giving others a bill for a service they never asked for or requested and saying, now you owe me payment. And if I don't get payment, there's going to be consequences, and you might not like those, so it's just best that you give me payment. That's Justice Graham Mule. Because basically, that's kind of what the City of Toronto was doing to people in regards to these legacy fees. Another thing, he made another comment. I'm here to judge this purely on the evidence that's in front of me, not your beliefs, whatever they may be. I'm just simply concerned with the facts. And if Councillor Matlin wants to give that to Mayor Tory, I'll give this to him as a gift. Now, Councillor Davis at Government Management once said, because we do have a way here of doing things off the edge of the desk. And lawyer Lawrence Ben Eliezer on AM 641 said, one of the pillars of our system of justice, if not the foundation of it, is the Latin maxim, audi alterum partem. And that is this one right here. Hear the other side. Hear both sides. No man should be condemned unheard. Because the City of Toronto never actually proved my father broke the law. Carlo Casali told me that, well, you know what, this will probably end up going to court. Like the matter before that, Aletta Purdy at Mel Asman Square said, if your father doesn't pay the fee, this will only end up going to court. So here we are, we're waiting around, waiting for the City of Toronto to take us to court, just like Section 454.2 of the City of Toronto Act, which is basically the codified maxim of law. The plaintiff or prosecution carries the burden of proof. So what happened? My father's just sitting around. He finds out one day that it's just being turned around and the fee is being put onto the taxes. Now, you can't pay the taxes without automatically paying the fine that the City of Toronto hasn't actually proved per Section 454.2 of the City of Toronto Act. So now you're in like, well, what do I do? Because what happens is the City of Toronto sends you a letter 3 years later saying, basically, we're going to steal your house. Do you guys think that's fair? No, it's not fair. So in the future, it's too bad Lou DiGeronimo wasn't here, make sure that the Water Division obeys the law, Section 454.2 of the City of Toronto Act.
Thank you. Are there any questions of the speaker by the committee members? Seeing none, thank you for speaking to us. Are there any questions of staff on this item? Are there any speakers to the item? In that case, may I have a motion to receive this item for information? Councillor Carmichael-Greb, all those in favor of receiving the item? Any opposed? And that is carried. And I will take a moment to thank the city staff, the clerk's office, and the committee members. I do believe that concludes our business for today. The meeting is adjourned. Thank you.